Stimulus in limbo. Nancy Pelosi's bill for $2,000 stimulus checks will be voted on today as President Trump vetoes a $740 billion defense bill. Good morning, everybody. It's just coming up to 8 o'clock here in London, 9 o'clock if you're in Paris or Berlin, or indeed in Brussels, where we understand negotiations might still be taking place. They've certainly been talking all the way through the night, trying to put the finishing touches to a post-Brexit trade deal between the UK and the EU. Waiting for European equity markets to open up then, and the expectation had been that we'll see a bit of a bounce. We had this news flow yesterday that there was the outline of a deal. We already knew that, but expectation overnight had been maybe that we'd be at this point of the day in a position to be looking at a deal being done. We're not quite there yet, it would seem. 8 o'clock, as I say, in London at this point. So the FTSE 100 opening up by 0.1%. That the first market out of the gates, waiting for this more positive news flow around Brexit, waiting for that to lift assets a little bit here in Europe, elsewhere as well. And we do see that the CAC 40 up by around 0.3%, the IBEX up by 0.25%, waiting for the Xetra DAX to open. In terms of the sectors we've been keeping an eye on, early signs of some movement to the upside in the banking sector. Some of the house builders also moving a little bit higher. We're fairly static on the grocery retailers here in the UK, but we're looking across all of these sectors to see any response to the latest Brexit news flow. Now, the UK and the EU do seem to be on the verge of unveiling a historic post-Brexit trade accord. Negotiators working through the night to put the finishing touches to a compromise. Joining us with more is Bloomberg News editor Adam Blenford. Adam, you've been keeping across the latest chatter from Brussels for us. They've worked through the night. What is the latest?
Good morning, Anna. They've worked through the night. They've got through the late night pizza deliveries, and we're now into a phase where we did expect perhaps a coordinated rollout of a deal this morning, with calls from UK Prime Minister Boris Johnson to European Commission President Ursula von der Leyen, and maybe a couple of press conferences, but there's no sign of those yet. And so we're waiting, as it were, for the puffs of white smoke to see what when the final deal hopefully will be struck, and then crucially what it might contain exactly. The news overnight was that the negotiators were locked away in Brussels, negotiating line by line, fish species by fish species, about what the shape of the fishing compromise would be in this much wider ranging trade deal.
Yeah, politically, I suppose we're going to be watching for the detail there. Are they floundering then on the detail of flounder, Adam? Are they floundering on that and the sole and the lesser spotted dogfish and all of the other fish that are caught off the UK coast? Is that where we are on this? What are we going to be looking for on the fishing agreement when we finally see detail?
Well, I wouldn't go so far as to say we're floundering, and I don't have another a fish pun just lined up there. But we're looking for a compromise that you know, the UK is thought to have given some ground on the amount of the size of the fish catch that it will allow the EU to take after this deal is struck, and that's been sort of getting them to come together on perhaps the EU would reduce its catch in UK waters by around about 25% over a period of 5.5 years. And initially, the UK was seeking a much bigger cut in EU fish catch over a shorter period of time. So over recent days, they've come much more closer to an agreement on that. It's a very sensitive issue in the UK. It's a very sensitive issue in a number of northern European states as well, particularly France and the Netherlands. And so it's come down to this very totemic issue, even though the much wider scope of the deal covers a 500 and so billion euro trade in goods and some services. So it's much wider than fish, but it's coming down to and hopefully not floundering on the fish debate.
Okay, so floundering would be to take it too far. Good to know, Adam. Thank you very much. Bloomberg News editor Adam Blenford joining us there with the latest on the all-night talks in Brussels. Joining us now with the market perspective, Samuel Zieff, JP Morgan Private Bank Global Head of FX Strategy. Samuel, really good to speak to you this morning. I understand we're seeing a bit of a drop in 1 week pound volatility as a result of some of the progress that is being slowly eked out on the fishing front and in these wider Brexit talks. What strikes you as interesting in the pound this morning?
Great. Thanks, Anna, for having me. So, yeah, as you said, I mean, you don't want to count your chickens before they hatch, or maybe I should say you don't want to count your fish before they're caught, but it does look as though we're on the cusp of a narrow trade deal, and that's what we've been looking for. I think here at the private bank, we've really been mostly focused on helping our clients navigate the volatility of Brexit, and particularly in sterling. And this was largely helping those with large sterling exposure kind of protect against large depreciation, given we thought the currency, particularly of late, was really already largely pricing in a deal being struck. So yes, we've seen some volatility come off, but I think this fits with the price action we've seen in recent days. We put near-term fair value for cable around 136, 137, so really not that too far north from here. And so if or when we see a deal is fully confirmed, we think sterling can rally a bit further, but would turn more cautious, much above those levels. I think we've long felt that upon reaching a deal, we'd probably get a little bit of a bounce higher before stalling, because we have to keep in mind that any deal is still going to be quite narrow. It's still likely to weigh on the UK economy, at least in the near term, cause some disruptions, even if less severe than in a no-deal outcome. And not to mention, we continue to see, separate and additional economic risks to the UK in the near and medium term, which could limit any of these relief rallies that we might see. There's increased local restrictions amid the ongoing sharp rise in COVID cases we're seeing. The UK already has a large external financing need that requires it to attract foreign inflows, and it has very low yields now. That didn't used to be the case in recent years. And of course, the BOE continues to flirt with negative rates, continues to flirt with further policy easing, even if we do get this deal. And so I do think that we think sterling can probably rise a bit next year amid a broader downtrend in the dollar, but it's not really our preferred expression of a weaker dollar.
Samuel, in terms of private banking clients and what they think of sterling at this point, you mentioned that it's about those with high UK exposure or pound exposure, thinking about where that leaves them. What about the international community and how willing they are or keen they are to take on sterling risk at this point? Because it's interesting that we've got two things going on here. We've got the Brexit narrative, but as you point out, there's the overlying economic weakness that comes with fighting COVID. But the latter of those is kind of true of many Western economies. So I wonder, with the removal of this uncertainty, whether there might be more keenness from the international client base to take on pound risk.
Yeah, that is really, I'd say, the key thing that we're watching. Most data does show global investors are underweight sterling. They're underweight UK assets. Now, I don't expect a huge rush to close those underweights after the deal, because as I mentioned, a post-Brexit UK economy still remains vulnerable, not just because of COVID, but for a variety of other reasons. It's not like the UK offers a great yield advantage compared to other developed markets with maybe less uncertainty and less economic weakness. But it is definitely something important to watch for any sustained kind of inflow. Haven't seen that yet, but we're definitely going to keep an eye on that. I'd say that is probably the number one bullish risk to our outlook that could create kind of an overshoot in the currency.
Yeah, that could be really interesting, and sometimes depends on political risk elsewhere, doesn't it, Samuel? Let me ask you about euro sterling, though, because we often talk too much about cable. I talk too much about cable. Maybe I should focus on the euro pound exchange rate. Nobody's travelling anywhere very far right now, certainly not if you're from the UK. But what about this particular exchange rate and how this is going to reflect the achievements and the risks going into 2021.
Yeah, I mean, not too dissimilar to cable. I think you do see a dip in euro sterling. You probably do get back down to, 88, 89 on the back of this, some of that exuberance. But really, as we look into 2021, we see very much a difference, between kind of the euro area and the UK. We think the euro area is less vulnerable. It has a current account surplus. There has been a large buildup of underweights among the global investor community that we think will continue to be closed in Europe, where we don't think it's necessarily going to be the same in the UK. And so we do think that over time, we will see the sterling be a bit of an underperformer in G10, which will allow euro sterling to move back up towards about 91 and change is kind of where our implied forecasts have it.
Samuel, thanks so much. Samuel Zieff, JP Morgan Private Bank Global Head of FX Strategy. Thanks very much for joining us. Coming up on the European market open, in fact, we'll get further thoughts from Samuel, so don't go away, Samuel. Thanks very much for staying with us. Sterling gains for a second day as a Brexit deal looks to be imminent. We'll keep across all of the market reaction to that story. We'll also talk about the US economy, how that's limping towards the end of 2020. That's all coming up. This is Bloomberg. Welcome back to the European Market Open. 12 minutes into a trading session that looks broadly positive. Another Brexit bounce then for European equities this morning, up by 0.5% on the FTSE 100, but the CAC also higher by 0.25%. Some movers in London to tell you about, and there were a few sectors we were keeping our eyes on with regards to Brexit deal response. We haven't had the deal yet. The outline of the deal is firmly in view, it seems, in Brussels, but they're still going through all the details on fish. That's kept them working through the night, eating eating pizza, we understand, to get to this place. So Lloyds and Barclays, though, have seen enough to respond positively, shareholders in those businesses at least. And so we see those shares moving to the upside. Lloyds up by just over 5.5%. In fact, Barclays up by more than 3%. The house builders also doing well. Persimmon to the upside. Taylor Wimpey up more than 2%. Barrett Development 1.6% to the upside. So we do see some movement coming through in some of those UK consumer-focused, reliance on the UK economy, cyclical stocks that we've been keeping an eye on as we've been going into these, or as we've been going through the last, 4.5 years of Brexit conversations. Now, in the United States, House Republicans are set to block Nancy Pelosi's bid to pass a bill boosting relief checks to $2,000. That's according to Bloomberg sources who participated in a call between House Minority Leader Kevin McCarthy and GOP members. Pelosi has taken up President Trump's plea for larger payments and is planning to seek approval in Congress today. Let's talk to Samuel Zieff, JP Morgan Private Bank Global Head of FX Strategy. And Samuel, I was reading all of those latest developments around stimulus and thinking, how does any of that stick to the dollar? And I'm not sure if it does. Do you think this debate around the stimulus checks, it matters a great deal to those people on the ground who'll be waiting for them? But in terms of where the dollar trades, how relevant is this news flow?
So we had a stimulus package not too dissimilar to the one that was unveiled and at least what we thought had been agreed upon, kind of penciled in by the end of Q1, which contributes to our bearish dollar view. You know, I think some people make the argument that, well, if you get big stimulus out of the U.S., it can boost U.S. growth and support the dollar. The work that we've done has shown that as long as global growth is doing well, and we do very much see an improving global growth environment in 2021, even if a lot of that growth is emanating from the U.S., particularly now with the Federal Reserve that is not going to be normalizing policy in the face of improving U.S. growth. They want growth to improve. They want inflation to overshoot. We think that that's still bearish for the dollar. Now, this hiccup, if there was to be no stimulus delivered, would definitely, dent our view. But we do think that something will get done, most likely the deal that's been on the table rather than a larger one, but a larger one with larger payments to domestic citizens in the U.S. is only better for growth in our view. And so would still contribute to kind of the dollar. I think if I take a step back and think about the dollar more broadly. Oh, sorry. Yeah, please go ahead.
Yeah, well, tell me more broadly about what you think about the dollar and where it heads, because I've been thinking all the way through this year, we talked less and less about interest rate differentials, and that seemed to be one of the things that weighed on the dollar, because if you weren't going to get the interest rate, if interest rates were coming down there, they were coming down elsewhere. Also, in terms of the ways that central banks responded to the crisis. I wonder if that changes in 2021, or are we still at rock bottom for many central banks through next year?
Yeah, no, we think that we are at rock bottom for central banks. If I think about kind of maybe I take it with a Christmas theme here. If you think about currencies being included on kind of the naughty or nice list, the dollar definitely into 2021 probably deserves to be on the naughty list because it doesn't have a lot going for it at the moment. What do I mean by that? If you think about what's happened from 2014 to 2020, the pillars that were supporting dollar strength were higher interest rates in the U.S., a slowing and uncertain global growth environment, not only because of the U.S.-China trade war first, but then COVID, of course, in early 2020. And if you look now there is no interest rate advantage in the U.S., right? It's been eroded completely, which has bearish implications for the dollar. Not only are you likely to see global investors, which had allocated a large amount of funds into the U.S. over the preceding 5-6 years, they're going to reallocate or rebalance some of those overweights. Also, the fact that there's no interest rate advantage means it's much cheaper to hedge foreign investors' existing holdings of U.S. dollar assets. And so we think that the change in that hedge ratio behavior is something that definitely continues to weigh on the dollar. But even if you don't have a change in the interest rate environment in 2021, which we don't expect, the growth environment is very different. You've moved from a multi-year period of very slow, anemic, even slowing global growth with the U.S. outperforming, to now one in 2021 where we see global growth more synchronized, improving globally. And that is a bearish environment for the dollar. And so we are looking for mid to single digit kind of further declines in the dollar, not only against G10 and the majors, but also against kind of a broader set of cyclically sensitive, including emerging market currencies.
Yeah, what's good for the world, bad for the dollar then. Samuel, thanks so much for joining us. Have a good holiday. Samuel Zieff, JP Morgan Private Bank, Global Head of FX Strategy. Samuel will be continuing his conversation with me, in fact, on Bloomberg Radio at 9 a.m. UK time. So I look forward to picking up a few of the news themes with him then. Up next on the programme, the US House Speaker faces a battle to pass a bill boosting stimulus payments for Americans. We talked a little about that with Samuel there as the nation ramps up its vaccine rollout. We're going to be hearing from our interview with Anthony Fauci next. This is Bloomberg. Welcome back to the European Market Open. A bit of a Brexit bounce giving a lift to European equity markets this morning. Just want to mention, though, it does seem as if we are facing a bit of a last-minute hitch, according to the Irish anyway, in the negotiations. But he also went on, this is the Irish Foreign Minister, Simon Coveney, commenting on Irish radio. He did talk about this last-minute hitch, saying, though, that is not surprising and that they do expect a deal to be done today. So there is an expectation in Ireland of a Brexit deal today. Now, the push to get Americans vaccinated against the coronavirus is underway, with about 1 million vaccinations so far. Dr. Anthony Fauci, director of the National Institute for Allergy and Infectious Diseases, told Bloomberg that vaccine skepticism is decreasing.
It's getting better, thank goodness. When we did surveys, a month or so ago, there was almost 50% of the people had some reservations or skepticism about getting vaccinated. The last survey, which was just last week, they said that more than 65% of the people said that they would be willing to get the vaccine. We really want to get that up even much higher than that, because the projection is that if you get anywhere between 70 and 85% of the population vaccinated, you would create an umbrella of immunity over the community, which could really get the level of virus so low that it would not be a threat. And then you could answer the question that everyone seems to be asking appropriately, is that when can we start approaching some degree of normality? When can we be doing things like safely having the children in school, or going to a restaurant and sitting indoors or going to a movie theater. You know, I would think if we start getting the general population vaccinated, let's say mid-April, between now and then, we're going through the various priorities. We started off healthcare providers and people in nursing homes and long-term facilities. The second level is people over 75 and individuals in what's called necessary or important places in society to keep society running. And that could be anything from a police officer to a fireman to someone who runs a grocery store so people can get food. When you get through those priorities and you get to what I call open season, like anybody can get the vaccination, even though you're not in a priority group, I imagine that's probably going to be sometime in April. And then if we can really get vaccines going in April, May, June, July, and August, by the time we get to the end of the summer, I think we can get to that goal that I'm talking about getting the overwhelming majority of the population vaccinated.
That was Dr. Anthony Fauci, director of the National Institute for Allergy and Infectious Diseases, speaking to Bloomberg about vaccine uptake in the United States. Let's stick with US themes. 'Tis the season to be wrangling, apparently, if you're in US politics. House Republicans are poised to block a bid by Speaker Nancy Pelosi to boost stimulus payments for Americans. Meanwhile, President Trump has vetoed a $740 billion defense bill passed in both chambers of Congress. Joining us now is Bloomberg News' Bruce Einhorn. Bruce, what on earth happens next as we draw to the end of this extraordinary year?
There's going to be a lot of things happening in the next few days or in the next week or so. So what we're likely to see first is there's going to be a session of the House, what they call a pro forma session, because most of the House members have already left for the holiday. In that pro forma session, there's going to be a call for unanimous consent to approve the increase of stimulus payments for individuals to $2,000, which of course is what President Trump has said he wants, and which is what the Democrats have said they want too. There has to be unanimous consent for that. If a Republican objects, then nothing happens that day. As Bloomberg News is reporting, House Minority Leader Kevin McCarthy has told his fellow Republicans that this attempt to pass the bill will fail. So someone is going to be objecting. We don't know who it will be. While all that's going on, then Nancy Pelosi has also said that she's going to have a vote to overturn President Trump's veto of the defense bill.
So if the GOP blocks the Democrats' proposal for unanimous consent, then what happens after that?
So if it seems likely the measure fails on Thursday, then the Democrats will be introducing a bill that they call the Cash Act. They'll be putting that on the floor on Monday, and that bill would codify the larger stimulus payments. And then it would be up to the Senate to decide what to do next, because the Democrats have the majority in the House. If Nancy Pelosi puts that on the floor, it will pass.
Bruce, thank you very much. Bloomberg News, Bruce Einhorn, thank you very much for joining us with the details of what's going on stateside. Still a lot to watch then, just as we thought we were winding down for the festivities of Christmas, of the New Year. It seems there's plenty still unresolved. Some of that is in the United States with regards to stimulus. Some of that still with regards to Brexit, although the outlines of a deal seem to have been reached. Will we really get the substantial deal by Christmas? Prime Minister Boris Johnson is set to speak this morning, but some of the timing of this seems to have been slipping of late, and we've had the Irish acknowledging that there is perhaps a last-minute hitch, but suggesting that's not surprising, and they still want to see a deal, or they still think there'll be a deal announced today. Up next, we speak to Anand Menon from the UK in a changing Europe. We'll get his perspective on all the toings and froings late into the night, through the night in Brussels. This is Bloomberg. Welcome back to the European Market Open. 30 minutes into our trading session here in Europe. Getting a bit of a Brexit bounce on European equity markets. Is it fading slightly, though, given that we don't have a great deal of Brexit news flow to actually move things on this morning? Yesterday, we learned that we were nearing the outline of a deal, and today we're still nearing the outline of a deal, although details around fish still being hammered out overnight in Brussels. The European equity markets then getting a boost from that, though. Stock 600 up by 0.2%. The IBEX up by 0.3%. The CAC up by 0.2%. US futures also pointing modestly to the upside, up around 1 to 0.3%, depending on which of those major markets you are looking at. Now, the UK and the EU are still on the verge of unveiling a historic post-Brexit trade accord. Negotiators working through the night, fueled by pizza, to put the finishing touches to a Brexit compromise. Joining us now is Anand Menon, UK in a Changing Europe director. Anand, we've been following this story for 4.5 years and beyond, because let's not forget it was 7 years ago that we got the announcement of the vote to take place. And anyone who's been following UK politics knows the relationship with Europe has been a topic of conversation for decades. So 4.5 years since the vote, does it seem to you as if we're going to get a deal in time for Christmas?
I mean, all the indications are they're dotting the I's and crossing the T's on the fisheries deal, going through, each species of fish and who gets what in sort of excruciating detail. And it's made more complicated by the fact that whenever the Commission agrees something, they've got to ring round 8 or 10 of the member states to check that they're happy. But they're very, very close to agreeing a deal by all accounts, yes.
So close to agreeing a deal. And what is it about the detail of how that deal will operate that you'll be looking for? What do you think you have a firm handle on already, and where could we be seeing some surprises?
Well, what seems clear is that this will be a deal that gives both sides access to the other's market without any tariffs and quotas, which is very, very important. But for me, the detail is going to be in whether or not they have aligned their rules in any areas. And that matters for two reasons. One, the more aligned the rules are, the easier it is to get trade to go from one side to the other. But secondly, and importantly, if there is alignment of rules, it's over that the Tory Brexiters in the European Research Group are likely to get upset. So both politically and practically, I think it is regulatory alignment and what extent we have that sort of regulatory alignment that's going to be key.
Yes. Do you think we are... So next week we understand, we've been told at least, that there's going to be a recall of Parliament, that Parliament gets to vote on this. Is that going to be a smooth process from what you suggested there, Anand? It seems as if, the ERG, that part of the Tory party that cares the most about Brexit, when they see the detail, will they have things to object to?
Well, there's a couple of things I think I don't know whether they're going to have things to object to. It seems that if there is any sort of regulatory alignment, then some of them will refuse to back the deal. In terms of the vote next week, to be honest, it really doesn't matter, because given that the opposition Labour Party is almost certainly going to vote for the deal, the government's going to get it through, even if a number of its own backbenchers disapprove. But the issue then for the Prime Minister is whether there's a noisy bunch of MPs in his own party that is annoyed with this Brexit deal, who are going to accuse him of selling out Brexit, and that might cause him problems down the road, even if not on the vote next week.
Right, so that could add to the noise around it. If that's not an issue, then I know that you focus on European politics as well, and what do you think about the way that this is going to be received by the European Parliament? We heard from one MEP earlier on this week who said, look, it is too late for us to vote on it. I know there's a mechanism for the European Council to do that in the short term, but how will this leave the MEPs feeling in terms of their ability to scrutinise and have a say on this?
Well, I think it'll leave some MPs feeling rather irritated because, of course, for a parliament to have to vote on a deal that is already being provisionally applied makes it even harder for them to come back saying we've got reservations, because actually at that point it's too late to change anything. Your choice is binary. You either vote this through, or a system that is now actually in operation has to stop operating. So it makes it harder, I think, for the European Parliament to come up with objections. Though, frankly, I think if all 27 member states have signed up to this deal, I find it very, very hard to see circumstances in which the European Parliament would vote against it.
And what role will the Scottish political conversation play here, do you think, Anand? Because, of course, fisheries got a lot of attention because it was used as a very symbolic industry, I suppose, by many on the Brexit side. It also plays into Scottish politics quite a lot because of the amount of coastline and significance of that industry in Scotland. Do you think this, clearly Scotland didn't vote to leave the European Union, but do you think the way that this goes down with the fishing community could have a bearing on votes in May in the Scottish Parliament and the independence questions?
I think it plays into Scottish politics in a number of ways. First and foremost, I think the very fact of getting a deal rather than a no-deal outcome is seen by people at number 10 as being helpful when it comes to the debate we're going to have about Scottish independence. Secondly, yes, you're absolutely right. Scottish fishing communities are key. The Conservatives hold a number of coastal Scottish seats where the fishing communities are crucial. So persuading fishermen that we've managed to get our fish back, as the government likes to say, is going to be important. And yes, in the run-up to very important Scottish elections at the start of May next year, the government being able to say, we've got a deal, it's going to keep trade flowing, and we've got some fish back too, is seen by number 10 as quite important politically for those elections.
And in terms of the services sector, Anand, I mean, that's going to be mostly missing, we think, from this deal. But many people point out that this could set the tone for future negotiations. How high or low should our hopes be about services being at some point included in some sort of trade agreement?
Well, for now, I'd say we shouldn't have much in the way of hope at all, because services fall exactly into that area where if you're going to ease trade in services, you have to align your regulations. And because Brexit was about taking back control of our laws, the government has been very, very reluctant to agree to that kind of alignment. I'm not convinced that under Boris Johnson we're going to see much more in the way of formal negotiations with the European Union. I think he wants to move on from Brexit, stop talking about it. But in future years, yeah, it's absolutely conceivable that a UK government will sit down with the European Union and start thinking about building on this deal that we've got now.
Thanks so much, Anand. Really good to speak to you.
My pleasure.
Anand
Take care. Merry
UK
Christmas.
in a Changing Europe Director. Take care. Have a good holiday. Thanks very much for joining us. Merry Christmas to you, Anand. Let's get a Bloomberg First Word News update. Here are some of the top stories that we're covering here at Bloomberg. The UK is locking down more parts of southern England in an effort to stamp out the new variant of coronavirus. New counties are being added to so-called Tier 4 from December the 26th, meaning that non-essential shops will have to close. Health Secretary Matt Hancock is warning Christmas and the start of 2021 will be tough. President Trump has pardoned his ex-campaign chief, Paul Manafort, convicted in 2017 of lying to tax authorities about millions he earned as a political consultant in Ukraine. He also pardoned longtime advisor Roger Stone, convicted of lying to Congress, and Charles Kushner, the father of his son-in-law, Jared Kushner. Republican members of the House plan to block Speaker Nancy Pelosi's plan to pass a bill boosting stimulus checks to $2,000. President Trump demanded the larger payments, but in a private call, the House Minority Leader asked members to reject the proposal, which requires unanimous consent. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Now, still to come on the programme, tearing up the rulebook. 2020 saw unprecedented support from central banks. Up next, we bring you a look back at the extraordinary year in monetary policy and look ahead to 2021. This is Bloomberg.
there are some signs that global growth may be stabilizing after declining since mid-2018.
As for the uncertainty surrounding the impact of coronavirus, are a renewed source of concern,
which could lead to disruptions in China that spill over to the rest of the global economy.
So when the problem is global, naturally the need for coordinated action is so much more.
We're not going to run out of ammunition. That doesn't happen.
We will use any and all flexibility that we have.
Recovery may take some time to gather momentum, and the passage of time can turn liquidity problems into solvency problems.
You can rest assured that the ECB will, within its mandate, continue to support the recovery.
We're not thinking about raising rates. We're not even thinking about raising rates.
An ambitious and coordinated fiscal stance remains critical.
Our new statement indicates that we will seek to achieve inflation that averages 2% over time.
Negative rates are in the toolbox, but we're not planning to use them at the moment. We've preferred to look at quantitative easing.
Rates will remain highly accommodative until the economy is far along in its recovery.
We need to thoroughly analyze the forces that are driving inflation dynamics today.
If growth expectations drop and financial system becomes unstable, the economy could fall into a full-fledged recession.
It is clear that COVID-19 will cause lasting changes to our economies.
Some of the main central bank governors there speaking throughout this year. 2020 saw unprecedented levels of central bank support in order to cushion economies from the brunt of the COVID-19 pandemic. Joining us now with more detail on this as we look back and look ahead is Bloomberg's executive editor of economics, Simon Kennedy. Simon, a very good morning to you this Christmas Eve. How would you describe this year's central banking response then? What has stood out for you as we look back?
I think what stood out is the size and the innovation of the actions the central banks have taken. Just a year ago, we were talking about whether they were out of firepower. Remember, in the wake of the 2008 financial crisis, they slashed interest rates, they bought bonds, and there's a great debate swirling about whether they had the firepower to act again. Suddenly, we're hit by the coronavirus. The world falls into deepest recession on record, and again, the central banks found ways to act. They slashed interest rates. Some of them moved to negative interest rates, which have a mixed reception. All of them bought assets, and all of them bought more assets than they did last time in different types. The last time it was government bonds. This time it was corporate bonds, particularly the Fed, weighing into all areas of the market, all areas of industry. So I think it's the ambition and the aggression that the central banks were again able to deploy this year that really stands out.
Yeah, many central banks seem to extend that shopping list of things they buy, didn't they, Simon? What's the policy outlook then for 2021? I mean, we sit here with low global interest rates, and many guests tell us that's going to continue.
Well, I think it's going to be a case of for interest rates lower for longer, and for the central bank balance sheets where they store those bonds they buy, they're going to be higher for longer too. The central banks very much want to ensure that the recovery that they're now trying to drive has escape velocity, can live without their support before they remove that support. And so a big thing for next year, I think, will be continuing to maintain this ultra easy money that we've seen this year, and also trying to communicate they're going to do that as well. We might well see a pickup in inflation next year as it kind of recovers from its slump of this year, and then it'll be relying on central banks to communicate that they're willing to look through that inflation spike. If they can't communicate that properly, or if they give markets a sense that the easy monetary policy is going to be reversed here, we might receive repeats of those taper tantrums that we saw in the previous crisis. So it's very much a communications job for central banks in 2021.
Okay, and what about the communications around negative interest rates? I'm thinking here in particular about the UK, the Bank of England, Simon, and the challenge that bank faces. I mean, just like all other participants in markets, watching to see what the latest on the Brexit negotiations is going to be and whether we get a deal today. But with or without a deal, what is the expectation for how low and how far into negative, perhaps, interest rates go in the UK next year?
Well, negative rates are a big debating point in the UK. They were off the table under Mark Carney, and now Andrew Bailey, the Bank of England governor, has at least put them on the table. There seems to be some division within the central bank over just whether they work or not. Obviously, the City of London isn't the biggest fan of them. Negative interest rates tend to punish banks, and so there's a lot of concern that would happen here. I think the Bank of England will be very happy if there is a trade deal versus the no-deal Brexit. That'll be one thing less to worry about. But again, even if there is a trade deal, there'll still be a reset of trade with our biggest partner, our biggest trading partner, and so there are going to be economic uncertainties. There's going to be threat of bottlenecks still, even with a trade deal. And so the challenge there is the central bank to see how much that's going to affect the economy at the same time that the new round of restrictions is going to squeeze the economy too. Bloomberg Economics calling for a recession, a double-dip recession. And so the Bank of England is certainly going to have a busy 2021. Whether they have room to cut rates is one thing, but they're certainly going to have to communicate that they're going to be keeping monetary policy very easy.
Simon, thanks very much. Thanks very much for joining us. Have a good holiday. Simon Kennedy, Executive Editor at Bloomberg Economics. Let's get a Bloomberg Business Flash, then the top corporate stories that we're covering here at Bloomberg this morning. China is launching a monopoly probe in Jack Ma's e-commerce giant Alibaba. Regulators are also summoning fintech affiliate Ant Group, weeks after it was forced to scrap its mega IPO. This marks the formal start of Beijing's crackdown on Ma's internet empire. Both firms say they will cooperate. Apollo plans to buy a nearly 50% stake in AB InBev's US metal container plants. The deal is worth about $3 billion and will help the Budweiser brewer pay down its debt. That's been a focus for the firm since debt peaked at $100 billion in 2016. In October, AB InBev said it would skip one of its dividend payments. Boeing may not be planning to build its 787 Dreamliner in Seattle anymore, but it still plans to inspect and repair them there. When production moves to South Carolina next year, it will keep some staff on to detect flaws in the new jets. Boeing isn't saying how long that will last or how many workers it will involve. That is your Bloomberg Business Flash. 8:48 here in London. Up next on the programme, we'll look at the market reaction to the latest Brexit news flow. We'll speak about the pound and Brexit-sensitive sectors. We're joined by Eddie van der Walt, our Markets Live editor. This is Bloomberg.
UK is undergoing an economic amputation. And basically having a thin Brexit deal at this point is saying there were no complications from the surgery.
This still looks like a pretty disastrous step. Perhaps they're making best of it now, but I've argued frequently, this looks like the worst decision in peacetime made by any country ever.
I'm talking probably 140 plus within, the first quarter or two of next year. It's been my contention that a deal will get across the line at the 11th hour for a little while. And I think there's a lot of upside in the pound to go in that scenario, just as that risk gets priced out.
Some of our guests there reacting to the news that the UK and the EU are on the verge of unveiling a historic post-Brexit trade accord. Joining us now is Eddie van der Welt, our Markets Live editor. Eddie, very good to speak to you once again this Christmas Eve. And we haven't quite discovered a Brexit deal under the Christmas tree, though, yet, have we? And we don't see it entirely reflected in the pound. We're still in the range that we were trading in earlier on this week. But with a 135 handle, what should we watch for on cable?
I think there are a lot of disappointed people out there this morning who were hoping for a big pop in pound once the news came through. But I think if we realistically, a lot of good news has been priced into the pound already. We've been running, up since May. Nevertheless, people were talking about 144 on the cable. So the move so far has been disappointing. Part of that may be the fact that we haven't seen the details of the deal. We don't, in fact, know that there is a deal. We still have to get all of the details through. And the other factor is that it is, a thin trading day traditionally. It is Christmas Eve, as you point out.
Yeah, I'm going to put a Christmas stocking on the mantelpiece behind me, Eddie, and see if someone fills it with a Brexit deal by the close of business today. Let me ask you about gold. I know that that's something you think about. Gold markets, you think there's a lot positioned for gold markets to do well as we move from 2020 into 2021. Why so?
I know, traditionally, if there's one asset that likes Christmas, it is gold. And, I think you may hope for a Brexit deal, but I think there are a lot of people out there who's hoping for gold jewelry and that sort of thing.
By the close of business.
What we traditionally see is that from about December 24 to about January the 3rd, gold's over the past decade, it's only fallen 2 years in that range, and there can be substantial gains over that period as well. And the other factor, of course, is people start talking about the New Year's fears and so on, which also drives investors then into the gold market. And the other factor is that a stronger pound, if we see one over the next couple of days, and a stronger euro drives down the dollar, which in turn pushes up the gold price.
We've seen some sectors of the UK market responding then, Eddie, to hopes and dreams, I suppose, of a Brexit deal, the banking sector certainly, and house builders. What are you watching for there? Yeah, I think so. Lloyds is one that's a particularly good benchmark in the UK. The local lender, has had a fairly good run on this. But lenders overall, builders, I think car makers underperformed today. They're actually down on the stock 600. But Britain is a big offset market for the car makers. And vice versa. A lot of UK cars goes to the continent. So I think that is a sector that also might pop. And I know the question of the day you've been asking on the Markets Live blog is a nice one to end on, Eddie. What did we learn from markets in 2020? I mean, one of the things I've learned is the ability of central banks to step in and take away our worst fears. What did you learn, Eddie? I think you nailed it on the head. I think that's it. I think central banks saved the day this year, but also I think what a lot of investors learned was just to ride out the volatility. When these big moves hit, if you're not correctly positioned for them, sit back, see what happens, don't overreact, because I think a lot of people sold late on that move in March and then was caught off guard when we had the bounce back come April. Eddie, thanks very much. Thanks so much for joining us. Eddie van der Welt, our Markets Live editor. You have a good holiday. Thank you very much. I'm going to get busy putting the stockings on the mantelpiece behind me. What am I more likely to find in there tomorrow morning? A Brexit deal or some gold? We'll see. I'll let Eddie know. That is it for the European market open. Stay with Bloomberg TV. Surveillance will be up next. They'll be taking you through the twists and turns as they develop from Brussels. We know they were talking all the way through the night. They were going line by line through each species of fish, trying to work out where the fishing rights were going to fall. Has that been a late stumbling block? Will we be able to get a deal today? Will we hear from the UK Prime Minister later on this morning? As we started out today, that was our expectation. Does that still stand? This is Bloomberg.
On the brink, the UK and the EU have the outline of a Brexit trade deal. Prime Minister Boris Johnson is expected to speak. Amp up scrutiny. China kicks off an investigation into alleged monopolistic practices at Alibaba and summoned the affiliate Ant Group to a high-level meeting. And stimulus in limbo. Nancy Pelosi's bill for 2K stimulus checks gets a vote today, but the GOP is set to block it. Welcome to Surveillance. I'm Yusuf Gameneddin in Dubai. We are awaiting the key protagonists in these negotiations between the UK and the European Union. The contours of a deal appear to have surfaced. An announcement is expected imminently, but we haven't gotten it just yet. Still, the very fabric of optimism is percolating through to some of these risk assets. Let me give you a bit of a rundown. We are higher on the stock 600 at the moment, and The European stock story taking one last Brexit bounce, as it were, before Christmas. German stocks are leading the pack. We're up about 1/5 of 1%. On treasuries, lighter volumes as you would expect this time of year. Overnight, the yield curve touching the steepest level in 4 years as risk appetite improved. The gap between 5 and 30-year yields was in focus. Cable, look, the analysis done by Bloomberg News suggests that cable is vulnerable if it doesn't breach the December 17 high. So the major technical line in the sand here is 136.24. At the moment, we are a little bit off the back of dollar weakness as well. And then Brent crude a little bit lower here, 0.5 of 1%. There was an inventory report overnight that helped the overall equation. Now, the UK and the European Union are expected to announce a post-Brexit trade deal today. And that's after negotiations worked through the night to finalize a compromise on fishing rights. The pound jumped on the news, and there's been optimism on the markets. Let's get some more of the breakdown with Anne-Marie Hordern. Anne-Marie.
Good morning, Yusuf. Well, what you can see here now is FTSE 100 is actually flat on the day. We're seeing a little bit more momentum, though, into the domestically focused FTSE 250. They're up more than 0.5%, this index. And yesterday, that was really the index that led the gains. The domestically focused stocks, the multinationals on the FTSE 100, they could come under pressure when you see the strength in the British pound. But the FTSE 250 is doing well, and yesterday it closed up more than 1.5%. The optimism of Brexit agreement, we are still, of course, waiting for the final finishing touches. All we knew yesterday is that there was a compromise on fish, there was a compromise on tariffs, but still they worked through the night and they still are working through the morning. We're waiting for Prime Minister Boris Johnson to potentially address the press. And then across Europe, we are seeing stocks up nearly 0.2%. Remember, though, UK markets as well as continental European markets will close early today. Normally a dull day, Yusuf, in terms of news flow, but not today with a potential Brexit gift underneath the Christmas tree. Lloyd's, Barclays, NatWest, all doing well today. The banking sector could breathe a sigh of relief, and the City of London. Countless times, again, we had banking executives come on the shows telling us that what they fear the most is a chaotic, messy Brexit. Potentially, this deal does not lead to one, and that is why you are seeing a little bit of boost here across the financials in the UK. And then finally, I want to look at what's going on with the British pound. Of course, this is the great Brexit barometer. And what you see here is we are, well, look at that, 136. That is the key resistant level. We haven't been able to really break out of that, though, recently. We did just now, though, pierce through 136 on British pound. But I spoke to Andreas Steno-Larsen from Nordea earlier this morning. What he was saying is that all of this was pretty much baked in, some sort of agreement, a base case agreement before the end of the year. What he's waiting for is for any type of comments on services, because services is 80% of the UK economy. And he says if we get that, we could potentially see more upside, Yusuf, into the British pound.
Anne-Marie, thank you for the moment. That's Bloomberg's Anne-Marie Hordern. Joining us now for a wider discussion is David Merritt. He's Bloomberg's Senior Executive Editor. David, when are we then expecting the news? Because the presser hasn't materialized just yet. And do we have any more details around who gave in to what?
That is, well, two big questions there. The timing of this being Brexit, of course, I think everyone knows better than to make hard and fast predictions on timing. We had teams obviously tracking this throughout the night in Brussels and London. At one point, there was going to be a press conference sort of in the 2 o'clock in the morning. Latest guidance is some point later this morning, but of course, the timing of that could slip. So we are poised, waiting, but I'm afraid no firm indication yet. There still seems to be some talks going on at the margins here around some of the details, some of the wordings of the final document, which is reportedly now running to around 2,000 pages. So when we get our hands on that, it's not yet clear, and it is not yet confirmed what the details are in that. We had some headlines overnight about the compromises on the fishing. That was the kind of the final big hurdle. We've got the top line numbers on that. But again, the devil in this is going to be in the detail. That's going to be really important for the impacts on different sectors, things like industry, energy markets, crucially, of course, financial services. And we're not going to know those, I'm afraid, until later today at the earliest.
What are some of the risks here for Boris Johnson in terms of his domestic political capital? Because, I mean, his key supporters are going to be very, very cautious around any potential signs of weakness.
You're absolutely right, and you can imagine. And in fact, some of the more hard-line Brexiteers in his party are already saying last night they're going to be poring very closely over the details for any signs of surrendering, as they would put it, to the European Union demands. Fishing is obviously a big part of that, but many other things. And then on the other side of the debate, people jumping on at the S&P last night, making a big complaint about some of the agricultural products. So Boris Johnson's going to have to pull Parliament back from its Christmas holidays next week to ratify this deal, presumably. And you can expect a lot of heated debate in those crucial few days to get it over the line. Boris Johnson is personally, of course, very invested in this. He's having a torrid time of it with the pandemic, terrible numbers on the COVID front in the UK at the moment, an imminent lockdown. He needs a win on this in order to go into the new year with any sense of any optimism.
I mean, are there any other hurdles that you can see that could prevent the implementation of a deal?
Well, you know, they may be arguing about it. He does have an 80-seat majority, so and Labour will probably vote for it. So the expectation this would pass Parliament. It's got to be ratified on the European side as well, remember. The European Parliament have already said their deadline has been missed, so there's going to have to be some sort of special protocol to implement that after January the 1st. Remember the Canada trade deal? That was almost scuppered at the last minute by objections from a small area of Belgium. So somebody somewhere in the European Union, all 27 countries, have got to agree to this deal. But, you know, the entire continent is rather worn out by this process. So the expectation at this point is that no one's going to throw a wrench in the works in the last minute. But, you know, this is the European Union, this is Brexit, so never say never. It could be an exciting few days in the run-up to the deadline at the end of next week.
Well, it wouldn't be 2020 if it didn't have more twists and turns. David, thank you for the moment. That's David Merritt, Bloomberg Senior Executive Editor. Let's get to some of the other stories we're watching with the Bloomberg First Word News. Starting off with the UK is looking to lock down more parts of southern England in an effort to stamp out the new variant of the coronavirus. New counties are being added to the Tier 4 from December 26, and that means that non-essential shops will have to close. The Health Secretary, Matt Hancock, is warning that Christmas and the start of 2021 will be tough. Republican members of the House plan to block Speaker Nancy Pelosi's plan to pass a bill boosting stimulus checks to $2,000. President Trump demanded the larger payments, but in a private call, the House Minority Leader asked members to reject the proposal, which requires unanimous consent. A COVID-19 vaccine developed by the Chinese pharma firm Sinovac has been found to be more than 50% effective in a Brazilian trial. But researchers are delaying releasing more information at the request of the company. 50% is the minimum standard set by U.S. regulators for emergency authorization. And vaccines from Pfizer and Moderna have produced far better results. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Stay with surveillance because we have quite a bit coming up. We're going to get more reaction to the news of an imminent Brexit trade deal, as well as more market reaction. Seeing British assets, European assets bid as we speak. And later, the battle for bigger stimulus checks. The House Speaker Nancy Pelosi responds to President Trump's demands. But will Republicans back the bill? What kind of scenarios are on the table? We'll have them all for you. This is Bloomberg.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Yusuf Ghamedin in Dubai. The UK and Europe are poised to, well, be looking at new developments. We are waiting to hear from the British Prime Minister Boris Johnson, who's expected to confirm a Brexit trade deal that has been agreed with the EU. The pound is extending gains on the news that an announcement is imminent. Joining us now is Adam Cole. He's the RBC Capital Markets Chief Currency Strategist. Adam, I'm looking here at a note from the Markets Live team, and they're saying basically that the fatigue from the process that took 4 years and countless of missed deadlines means that this is the ideal setup for a sell the fact price action. Is that something you can get on board with?
I could, yes, and I think the last spurt higher in sterling this morning takes us to the point where we have pretty much fully discounted the deal that's likely to be announced today. So looking at proxy measures, we're high 90% probability of a trade deal by the end of the year. And it's time for sterling to move on from there. And in doing that, there are still considerable stumbling blocks ahead. So in the early part of next year, we'll likely have very significant disruption to UK trade with or without a deal as a result of leaving the single market and customs union. We've got whole swathes of British industry, not least the whole of the service industries, that aren't covered by this deal, which is going to be the key topic of debate going through next year. So yes, I am of that view that we are taking out the last little bit of risk premium in sterling this morning for no free trade agreement, but the road is rocky from here onwards.
How important was it, Adam, though, for policymakers to come together and bring out something that is meaningful to markets before the end of the year? How much was at stake here for the UK, or how much is at stake? Again, we don't have the deal yet. So how much is at stake for the country?
It's certainly a positive development that we do have a deal, albeit a narrow one, that covers a relatively small proportion of total UK trade. But it is a positive development. I wouldn't want to suggest otherwise. And it does mean that the negotiations, and there are still many, many negotiations to go on next year, they will go on in a more positive atmosphere than would have been the case if we'd left with no deal and just defaulted to trading on WTO terms. So it'll be much less antagonistic and a much more positive environment. But I'm just thinking that we shouldn't get too caught up in the euphoria around the FTA that looks like it could be signed today, and not lose sight of the fact that some of the most important industries to the UK, service industries, not least financial services, are in no way covered by this deal.
Adam, when I think back to 2016, sort of the seismic events of the initial push out of the European Union, the response that we saw in markets even outside of UK borders was clear. These last few times, the transmission mechanism or the contagion levels are much, much reduced. Is that something that's going to stay that way as we get into the new year as well? Is that there's less cross-asset spillover risk from developments outside of the UK?
I think that's probably true. And looking back at sterling's history over the last 4.5 years, it's clear that the biggest shift was back in 2016 itself. And there was a very large risk premium built in very quickly in the 6 months or so following the referendum outcome. Subsequent to that, the variation has been much more limited. And I think that probably is the case going forwards. My bias is that sterling trades lower next year. However you look at that versus the euro, or actually versus the dollar on our views as well. but that relative to the magnitude of the move and the repricing back in 2016 itself, the moves are relatively small going forwards from here. And it is true that sterling is already carrying a very large risk premium, so movements from here onwards are within tighter parameters.
For those looking to bank on a few tactical opportunities, are the conversations at the RBC Capital Markets this morning just around cable, or would you say, you know, look at euro sterling, look at some other crosses as well, if you're banking on that kind of angle?
So on our own views, it looked at longer term, but through the noise that we quite possibly will get around the turn of the year and the early weeks of next year, we like sterling underperformance generally. We express that in our kind of year ahead views through a simple 50-50 basket of euros and dollars, because I think euro dollar itself has some tricky questions to negotiate next year, and to make it a sterling view, diversifying across a range of currencies is probably the way to play it. But equally, we don't share the consensus view that next year will be dominated by dollar weakness. So I'm equally happy to play a weaker sterling versus the dollar, because I'm more constructive on the dollar generally than most of my counterparts are.
Yeah, we'll get to that shortly. Adam, hold that thought. That's Adam Cole of RBC Capital Markets. He stays with us. Let's get you a bit of a snapshot then of what is in the pipeline. The U.S. House Speaker faces a battle to pass a bill boosting stimulus payments for Americans as the nation ramps up its vaccine rollout. Our interview with Anthony Fauci, that's the government's top infectious disease doctor, a man who needs little introduction, is up next. This is Bloomberg.
You know, I would think if we start getting the general population vaccinated, let's say mid-April, between now and then, we're going through the various priorities. And then if we can really get vaccines going in April, May, June, July, and August, by the time we get to the end of the summer, I think we can get to that goal that I'm talking about getting the overwhelming majority of the population vaccinated.
That was Dr. Anthony Fauci, director of the National Institute for Allergy and Infectious Diseases, speaking with Bloomberg about the vaccine rollout. Let's now talk stimulus. House Republicans are set to block Nancy Pelosi's bid to pass a bill boosting relief checks to $2,000. That's according to Bloomberg sources who participated in a call between the House Minority Leader, Kevin McCarthy, and GOP members. Adam Cole of RBC Capital Markets is still with us. Adam, a note earlier by Ben Emmons of Medley Global Advisors writes that the market is now underpricing the gambit of this virus relief bill dying out. Is that something you agree with?
I mean, certainly the way the markets have traded in the last few days, with a still positive bias for risk generally, does suggest that the market is quite sanguine. I think that a solution will be found one way or another, either through the president stepping back and leaving Congress to have its will with the package, or the two houses vetoing the overruling of the stimulus package, or some compromise being reached on the content of the package itself. One way or another, the market seems to be quite sanguine, I think, on the stimulus being delivered one way or another. And I don't think that's unreasonable. There is some risk that doesn't happen, but as a base case, I would think it's reasonable that markets are priced for a solution of one kind or another that does eventually see the household checks that delivered and the stimulus package released.
Let's go with the scenario where they do go back to Congress and they come up with a bigger package. When does the needle get moved in terms of making a difference in inflation expectations and economic growth projections for the first half of 2021, and ultimately your bullish dollar call?
Yeah, so, well, I mean, the immediate risk, of course, is because the stimulus bill is mixed up with the general funding bill. It needs to get passed very early next week to prevent a government shutdown. And again, I think it's reasonable to assume that's the case, but that's the immediate hurdle we've got to get over. In terms of its impact on growth expectations, it's not critical, I think, for the outperformance of the dollar that we expect going forwards. And the notable feature of recent months has been the improvement in US growth expectations relative to the rest of the world, despite the fact that you've had complete failure to deliver the second dose of fiscal stimulus. So if we look at expectations on your own surveyed consensus growth expectations, the qualitative story people have behind this notion of dollar weakness next year is all about the rest of the world catching up with US economic growth. And actually the reality is exactly the opposite is happening. So looked at across 2020 and 2021, the US is the only major economy where growth is cumulatively positive over those 2 years now, and it's positive and rising. Whereas almost all of the rest of the world has a consensus growth.
We're going to have to leave it here. Adam Cole from RBC Capital Markets, he's the chief currency strategist there. We're looking at a live shot of London as we count down to the press conference. What are we going to get? This is Bloomberg.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Welcome back to Surveillance. It is a big day as we count down to the press conference by the Prime Minister, Boris Johnson. We were expecting him earlier on in the hour, but that hasn't quite come through. So the UK and the European Union are expected to announce what is going to amount to the details of their deal. We understand that some of the initial contours have crystallized, and they're actually in the rooms right now hashing out the final polish, as it were. Let's get some additional details with Rosalind Madison. She joins us now on the phone. Rosalind, thanks for coming on the program. Give me a bit of a rundown then as to the domestic political challenges Boris Johnson is going to have to juggle with any deal that he gets from the EU.
Well, the first thing for him is actually to make good on his promise, which he made going into the last election, was simply to get Brexit done. And if he manages to get a trade deal agreed and announced in the next couple of days, hopefully even today, that will be possibly a win for him, especially after a very, very tricky year politically, not just with Brexit, of course, but with many questions over his handling of the pandemic. And he vowed to get Brexit done and then return the focus to the domestic economy and helping out areas in northern England, for example. And he needs this as a reset, a way to throw that narrative forward to say, well, we can put this one behind us and move on, and particularly, again, focus on those heartland areas where he pulled the Labour vote away at the last election. And of course, those scenes of chaos at the port at Dover this week can't have helped him. He needs to avoid that happening again.
This is getting excruciatingly tiring in terms of the last-minute wait. Again, we were scheduled to get something early on in the hour. What's holding things up?
It is a bit like kids in the back of the car, isn't it, saying on a long trip, are we there yet? We all kind of feel that. We seem to be close but not quite done. It's really finalising some of the detail. And the key issue here is still the fish. The British have made compromises, but there's a question about how it's actually worded in the document. And sources are telling us that Johnson has accepted that the block share of the catch in UK waters should fall by 20% over a period of 5.5 years. That's down from the UK wanting an 80% reduction, then a 30% reduction. But fishing, of course, is a very emotional issue for all sides, even though it's a small amount of the actual trade between the UK and the EU. It's part of national identity, centuries even of maritime history. So the wording of how this is done in the document is very, very delicate.
If we don't get a deal in the coming hours, is there another window for this? Because we've heard time and time again that this is the last crunch opportunity and then it gets rolled over to another date.
Well, that's right. I think everybody is hoping this does not drag into Christmas Day. And the latest we're hearing is that there is likely to be an announcement today. The negotiators are locked in a room in Brussels trying to push this through. Boris Johnson and the European Commission Chief Ursula von der Leyen have been talking constantly. So the expectation is still likely something today. It would give Boris Johnson that nice Christmas present, but they are running out of road. The transition period ends on December 31. If they don't get this done, and also if they don't get it ratified by either side's parliament, it has to go through for broader approval, then they're looking at an extension or at some kind of bridging arrangement that allows the trading rules to continue into January. But certainly they need to get it done in the next couple of days.
Roz, great speaking to you this morning. Rosalind Madison, Bloomberg's executive editor for international government. Well, joining us now is Simon Fraser, Flint Global Managing Partner and former Permanent Secretary of the Foreign and Commonwealth Office, the department's chief civil servant. I mean, let me get an initial read then from you on what looks like an outline of a deal here.
Yeah, well, thank you very much. I mean, yes, it does look like finally, after 4.5 years, we are on the verge of getting a deal. I'd be very surprised now if that deal was not completed today. It's going to be a deal that probably gives us tariff-free and quota-free trade in goods and in agriculture, and that's important. But it's also important to say that we've got to look at the detail of that in terms of the different sectors and how it applies to different industries. And we've also got to remember that there are an awful lot of things like trade in services, equivalence of data provision, which we don't know whether they're going to be covered and to what extent. It's still a limited deal, but it looks like it's going to be a deal of some sort.
Were you surprised that they did eventually come through with something? At least that's what it looks like now, because throughout the process you were quite skeptical that anything's going to come out of the oven at all.
No, I've always thought actually that it was more likely than not that we would get a deal because of the political pressures and because of the consequences of no deal. What I've been arguing against is that we should have no deal, because I think that would have been a very, very bad outcome. So I'm not surprised that there is a deal. The point is the one I was making before, that it's still a limited deal. This is really good news, but it's not a great triumph. It's a sort of orderly withdrawal, if you like, in terms of the economic relationship. And you have to remember that even with the deal of this sort, the British Finance Ministry is saying this is going to reduce growth in the British economy by about 5% over 10 to 15 years compared with what would otherwise have been. So let's not exaggerate how good an outcome it is, but let's welcome it because it's much better than the alternative.
Well, just because they're able to sign a deal at the table doesn't mean that it's all smooth sailing from there. Implementation risks, I look at some of the domestic opposition, I look at the European Research Group. Any of that a red flag for you?
Well, it's true that on both sides, this deal has to be agreed by governments and also by parliaments. And of course, it has to be accepted in public opinion as well. On the British side, the Prime Minister, Boris Johnson, has always been really conscious of the pressure from what you might call the really hardline Brexiters. That's why we've got, in effect, a hard Brexit. This is a hard Brexit. I would be surprised if the so-called ERG, the European Reform Group, actually rejected it. But I think they will grumble about it because a lot of them are sort of absolutists when it comes to sovereignty, their idea of sovereignty, and some of them would I think, have been happy with no deal. So there will be pressures, but I think it will go through. I think on both sides in the end, people will recognize that this is better, as I've said, than the alternative of no deal.
As we await more details on what the deal actually entails, all eyes are going to be on further agreements, perhaps with other countries down the line. You've always lamented that the UK is losing its relevance in some bigger foreign policy matters. Could this be perhaps a stepping stone towards making more progress on that front and becoming more engaging with the rest of the world?
Well, I really hope so, and I think that's a very important point. You know, this country needs to move on. We've been focused on Brexit, and of course, like others, we've been suffering from COVID. We really need to look to the future, and we've got to work out what are the relationships we're going to have with Europe, but also, of course, with the new administration in America in particular, and more broadly. So I do hope that this Brexit deal, imperfect as it is, will be a platform for us to build forward, both with Europeans and with others. And this idea of global Britain, which our government has been promoting, is something which now needs to be made a reality.
One thing that we've been doing on this program is looking back at 2020, because it's been such a tumultuous year, everything from the pandemic to, of course, the Brexit negotiations, to central bank stimulus. I mean, the list goes on and on. What would you say has been the biggest learning takeaway for you from the wider Brexit debate that you can carry into 21?
Well, I mean, I think the thing that we've learned from the Brexit debate over time is that it's not a good idea for countries and governments to set out on a radical course of action when they don't have a clear plan or understanding of what the destination is going to be. And of course, what's happened is that as we've gone through it, we've come to more and more extreme outcomes. So that is definitely a learning point. I guess the other big learning point from this year has been you can never predict things, and therefore taking risks is dangerous. And when you have important relationships internationally, as we do with the rest of Europe, you need to be very careful about how you treat them and how you nurture them, because in the end, we need collective responses to the sorts of challenges that we're facing, be it economic, trade, or of course now pandemic and dealing with the consequences of COVID. International cooperation is important, which is also why I welcome the attitude that I think the incoming administration under Joe Biden is going to take to its relations with its allies going forward.
Simon, I've really enjoyed this exchange. Thank you for your time. That is Simon Fraser. He's the managing partner of Flint Global. Coming up, the UK and the European Union are on the cusp of unveiling a post-Brexit trade deal. We speak to the Conservative MP and chair of the Justice Select Committee. That's Bob Neal, about the implications of this potentially historic announcement as we look at live images from 10 Downing Street. This is Bloomberg. You're watching Bloomberg Surveillance. I'm Yusuf Gameneddin in Dubai. Let's get the Bloomberg First Word news for you. Some of the important stories. The UK is locking down more parts of southern England in an effort to stamp out the new variant of the coronavirus. New counties are being added to Tier 4 from December 26, and that means non-essential shops will have to close. The Health Minister, Matt Hancock, is warning Christmas and the start of 2021 will be tough. President Trump has pardoned his ex-campaign chief, Paul Manafort, convicted in 2017 of lying to tax authorities about millions he earned as a political consultant in the Ukraine. He also pardoned long-term advisor Roger Stone, convicted of lying to Congress, and Charles Kushner, that's the father of his son-in-law, Jared Kushner. President Donald Trump has vetoed a $740 billion U.S. defense bill. He criticized the measure, calling it a gift to Russia and to China as well. But the House Speaker, Nancy Pelosi, is promising swift action next week. The bill originally passed by enough votes to override the president's veto. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I want to circle back to the market action. We are cautiously risk on across the board as we await an official announcement on a potential UK-EU post-Brexit trade deal. S&P 500 mini futures are called higher. Stocks in Europe charging forward, 1/5%, led by German stocks. Treasuries, US 10s at 94 bips. cable appears vulnerable. Broadly, we're looking at a weaker Bloomberg dollar index, but only marginally so. Volumes are lighter, as you'd expect this time of year, and Brent pretty much unchanged at $51.17 a barrel. But let's get to our top story then in more detail. The UK and the European Union are on the cusp of unveiling a historic post-Brexit trade deal after nailing down a compromise of fishing rights. The long-awaited announcement is expected to come today. Joining us now is Bob Neal. He's the UK Conservative MP and the chair of the Justice Select Committee. Bob, from what you've seen from this deal, will it be acceptable to the party?
I think it will be to the majority of the party. There are some people who take a very ideological view over the sovereignty issue, but the Conservative Party has always been a pragmatic party at the end of the day, and we've always been a pro-business party. Have you just said, you know, the market's already shown that business thinks this is a good thing, and I certainly will be supporting it 100%.
How about your Eurosceptic colleagues?
Well, although some people, I think, will cavil, as I say, on this rather technical, I think, and almost theocratic point about ceding sovereignty. Actually, every time you strike any agreement, you say you cede a little bit of your sovereignty. But I think the vast majority of the party, who were elected, after all, only a year ago, with a large majority, on the basis that we back the Prime Minister in trying to get a deal, will actually want to back him now. And that's certainly to say what I will do. And I'm confident, I think, that the majority, vast majority of my colleagues will do that too.
You've been in touch with your constituency. How would you describe the damage that's being done to businesses as a result of the leaving it to the last minute, the fact that we're just 1 week away from rollover?
Well, it certainly hasn't helped. I've been keen to have a deal much earlier in the process. I voted for the previous deals that Theresa May put forward, because in a constituency like mine in London, where financial services, which actually are not part of the trade deal, but are still really important, are concerned, certainty for business, certainty for the small and the medium-sized businesses is really important. Business uncertainty has not been helped, but better late than never. And what I hope is that the trade deal that we get now will also be linked very swiftly to a data adequacy agreement so we can continue data sharing. That's really important for financial services, but also that's really important for security, police and justice cooperation. And there are separate strands of negotiations going on around those issues. So if we want to tackle organised crime and terrorism, we've still got to have a common, or at least an agreed adequate set of data protection rules to ensure that we can transfer the data between us to do that too. So trade is important, but there's a bigger picture at stake too.
Bob, you mentioned financial services, critically important for your scope of operation. How worried are you that inevitably, though, as a result of all the shifts and push and pull and the roller coaster ride that's been the last 4 years, that the city is just going to have to lose its position as a supreme location and destination for capital?
Well, I mean, one of the reasons I voted Remain and campaigned strongly to Remain is that financial services is the biggest single employer in my constituency, and it's the UK's jewel in the crown economically. I think there will be some pressure on us, of course, but equally the city has over the years shown itself to be very adaptable, and although there will be some difficulties, I think, with some areas of access to markets not being as seamless as they were in the past, we do have the advantage still of a number of things. One is the particular depth of our capital markets. A lot of EU 27 countries still actually raise a considerable amount of their sovereign debt in the City of London, and there's still no alternative, if you like, nexus of those skills and depth of capital markets that's available elsewhere, certainly not in Europe. So I think with some workarounds and some adaptations, we can still do that. There will be some losses, some job losses and some loss of trade. I think we can bounce back from that. I'd rather we didn't have to go through that dislocation, but accepting what the outcome of the referendum is, I think we can adapt. We've also got the advantage of the English language, the time zone, which works well for us in international trade, and very importantly, wearing my Justice Committee chair's hat, the fact that English law English common law, which most of financial services contracts are written, is recognised as a gold standard in which to contract. I think those are still advantages we hold.
If we do get a deal here, what kind of additional persuasion will be necessary to get it across into the executive branch, to get actual implementation underway? And do you foresee any potential stumbling blocks at all?
Well, none of us have yet seen the detail, and we'll have to see how the implementation goes. I was concerned, and others were concerned, about how Northern Ireland might work out as a potential stumbling block. I managed in Parliament before Christmas to broker a compromise over a separate piece of legislation, the Internal Markets Bill, which could have derailed the process, which the government accepted. So I think that is workable, but there's always, you've always got to nail down the detail in matters in relation to Northern Ireland because it's immensely sensitive issues. But I think as Simon Fraser was saying to you earlier on, I'm sure that an incoming Biden administration will want to work constructively with us on that. And a deal will certainly make those relationships around that area of potential tension much, much better. And as I say, we then need to nail down the details of the sector-specific arrangements. There will still be some transactional costs. So I'm not going to say this is all going to be sweetness and light and simple thereafter, but at least we've got a framework now upon which to move forward, and the key uncertainties are removed.
As we get into the new year, what are your legislative priorities, Bob? How do you plan to hit the ground running?
Well, the first thing we certainly need to do is to get all the legislation through to ratify the deal. It's quite likely that Parliament may be recalled between now and the new year. Fine, I'm happy to come in on Christmas Day if need be to get this deal through. I don't think it'll be that bad. But we need to get that done. As I mentioned before, I'm really keen that we then nail down what is required on data sharing, and where we are on policing, criminal justice and legal cooperation. There's a lot of talk's been done on that. It's really important that we get that on the statute book. We don't want a gap in that which gives organised crime a free Christmas present for a few weeks or months. So we want to get that nailed down. And I'm also very keen that we get, this may sound very technical, we get Britain signed up to the Locarno Convention on International Civil Law. That's how we can then continue to contract and enforce judgments of our courts as a sovereign independent nation rather than as part of the EU. Get that done in place as soon as possible. That's a really top priority for business, simply so you can enforce your contract wherever you're trading within the EU or elsewhere.
Right. This has been really helpful. Thank you for making the time in your busy schedule. It's Bob Neal, the UK Conservative MP and chair of the Justice Select Committee. Thanks again. Coming up, all eyes firmly on Downing Street as we wait to hear from the British Prime Minister Boris Johnson. They're running a little bit late. The press conference was scheduled for a little bit earlier as they put the final polish on things. Will it be a Merry Brexmas? I think I got that right. It's a bit of a strange word to pronounce. Has a trade deal been secured with the EU? We'll have more on that. This is Bloomberg.
climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, and politics. This is Bloomberg Surveillance. I'm Yusuf Gameluddin in Dubai. Let's take a look then at what's coming up in the coming hours. At 11 a.m. London time, you have the Turkish Central Bank. They're probably going to raise their one-week repo rate. Additional tightening may be needed as inflation surged to 14% last month. And in the past, the central bank has shown that it has the capacity to surprise. And then with the holidays coming, most European markets will be fully closed or partially closed later today. If you're going on holiday on time, then, well, good for you and all the best for 2021. If not, well, then I'm sharing the burden with you. In the interim, the U.S. stock market has also half-day trading and closes at 6 p.m. UK time. But I want to get you the lowdown again on the markets and on the pound specifically as well. Sterling is rallying on the news that we could get a Brexit trade deal later today. And that's after negotiators worked through the night to finalize a compromise on fishing rights. The agreement will allow for tariff and quota-free trade in goods and cooperation in areas from security to aviation. European stocks are powering ahead, cautious optimism then as we get the contours of a deal. But again, we're running late. The press conference was expected about an hour ago. We'll take the story forward. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
This morning, it is a gift that keeps on giving. President Trump, he overrides courts, juries, and prosecutors. He grants clemency to loyalists. The president sees, quote, a hoax, misconduct, and injustice. Sass of Nebraska says, quote, this is rotten to the core. For the first time in 53 years, a president vetoes the defense spending bill. It is, quote, a gift to China. Congress, they must override the veto. And it is Christmas Eve amid the pandemic partition. There's no relief for stimulus. There is no income replacement. Meanwhile, under the Abramowitz tree, the Mercedes-Maybach GLS SUV, it starts at $160,500 with vibration reduction for Lisa, the kids, and the chauffeur, and they can listen nonstop to Mariah Carey, killing it this year in the 26th year of All I Want for Christmas.
Okay, Tom.
That classic hit.
Were you the one who got me that car? Because I don't know who else is going to put that under the tree, I got to say.
I tell you, it is the strangest Christmas Eve ever. Seriously, folks, we welcome all of you to a holiday. We got some great guests to help us with this. Kid Jukes will be along. Some others in the next couple hours. My brain is freezing
Tom,
over here with
can I help you out here? Jonathan Farrow left. He went on vacation and he said, I wish for you to talk about Brexit for all of next week because I have zero desire to ever hear about Brexit again. Well, John Farrow, Merry Christmas.
Before we get to the news, I want to start, Lisa, with a basic idea, which is the markets are closed. It's confusing. Bonds are in their own world, and am I right?
Always
Equities
in their own
close
world.
at 2 p.m.?
Yep. Everyone's going home, and they basically have already gone home if you look at the price action.
Well, we do have some huge news flow this morning, no question about that. And, of course, we're looking at Brexit and some conclusion there. We're also looking at the markets with another equity lift. I don't think Christmas Eve is an entry point. That's all there is to it. With our first word news in New York, Ritika Gupta. Good morning, Ritika.
Good morning, Tom. Lisa. President Trump has pardoned his 2016 campaign manager, Paul Manafort. Manafort had been convicted of financial crimes and illegal lobbying. The president also pardoned political advisor Roger Stone. He had already commuted Stone's sentence for lying to Congress. Also pardoned the father of the president's son-in-law, Jared Kushner. Charles Kushner was convicted of crimes that included witness retaliation. House Speaker Nancy Pelosi is hoping to seek unanimous consent to increase the individual payments in the stimulus bill as President Trump demands, but House Republicans are likely to block the attempt. That's according to a person who was on a call with GOP lawmakers. If the attempt is stopped, Democrats will introduce a new bill next week that would raise the payments from $600 to $2,000. The UK and the European Union have resolved their differences over fishing rights, and now they're set to unveil a historic post-Brexit trade agreement. Negotiators worked through the night to polish the compromise. The deal will formally complete the UK's separation from the EU 4.5 years after the 2016 referendum. And finally, China is targeting billionaire Jack Ma's Alibaba empire in a monopoly investigation. At the same time, regulators have summoned Alibaba's affiliate Ant Financial to a high-level meeting over financial regulations. The pressure on Ma is part of a broader effort to rein in the increasingly powerful internet sector. Global News 24 hours a day on air and a Bloomberg Quick Take powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom?
Ritika, thanks so much. Some movement in the markets. Let us brief you on that before the early bond and stock closes. Futures up 9. Again, a continued lift there. 36.90 on SPX Dow. At 30,108, up 74 points. The VIX is an important story. It's come in 9 big figures off the crisis of 3 or 4 days ago. 22.55 is a constructive number. Bonds tell me nothing. They do tell Lisa something, though.
Of course.
10-year tips on negative 1.05. I'm struggling here. Sterling out to a recovery high, 136.01. Lisa?
Yeah, the sterling actually is the one moving spot in markets. Otherwise, it's the day before a big holiday. Look at S&P futures are up 0.1%. Woohoo! Bonds are telling me that they are asleep. Nobody is doing anything there. The dollar, a little bit of weakness, perhaps in the strength that we're seeing over in the Euro region. And there's a little bit of a risk on feel. But really, I mean, it seems like everybody, they're already home, but they've just logged out, Tom.
It is the markets and it is the moment of this pandemic worldwide. But what is so, so important is we also have, yes, the pandemic, but finally Britain and the European Union at some form of agreement. Matthew Goodwin is at the University of Kent, professor of politics and international relations. Matthew, what is the distinction our audience needs to know right now? I'm hearing back and forth, and I'm hearing all the platitudes on that. What matters right now?
Good morning from an icy cold London. What matters for Boris Johnson is that he is able to sell a deal that shows a meaningful break from the European Union, and that on those all important tension points around fishing, around the level playing field, around how we're going to police this deal, he can say with a straight face in the press conference this morning that he has delivered on his election promise to deliver the withdrawal agreement and then to sign a trade deal with the European Union.
Lost in translation for me is the support of the Prime Minister. I look at the British newspapers and, you know, one's got one angle, one's got another angle. And I'll be honest, Matthew, I can't tell where the Prime Minister fits in with the people of the United Kingdom. Where does he at this important moment?
So this is the most important moment potentially in Britain's post-war history, alongside that Brexit referendum, because what Boris Johnson is doing is essentially remoulding Britain's relationship with Europe and the wider world. And for Johnson, who came into power promising with that three-word slogan to get Brexit done, this, Tom, is his entire premiership. What we're seeing happen today is Johnson essentially delivering on the main objective of his premiership, which was to leave the European Union with a deal. And the one thing I would add here, Tom, is along the whole way, over the last few years, we have consistently actually got Boris Johnson wrong. We said that he would prefer a no deal over the withdrawal agreement. He got the withdrawal agreement. We said he'd prefer a no deal over a trade deal. It looks like today he's got the trade deal. And this is why I personally think he has emerged with the largest majority in British politics since Margaret Thatcher's third and final majority in 1987, because he is able to tap into the public mood in a way that very few other politicians are able to do.
So let's paint a picture here of the significance of this agreement that may or may not be voted on today between the UK and the European Union. It's been after almost 5 years of contentious talks, of deadlines that were false deadlines, of John Farrow saying, when is this going to be over? We now have an agreement on fishing, which actually accounts for, I was doing the calculation this morning, 0.15% of all trade between the UK and the European Union. What does this set us up for going forward in terms of the foundations for a new trade agreement between the EU and the United Kingdom?
Well, most importantly, what it does is it avoids that very disruptive no-deal alternative whereby there would have been a radical, sharp break between the UK and the European Union. By putting together this thin trade deal covering key aspects of things like fishing, like how we're going to police the deal, like some issues around equivalence, even though we've yet to see the detail and agreements on financial services, they'll come later on. What it does essentially is it creates a foundation on which the UK and the EU can now continue to talk, can continue to develop their relationship. There'll be no return to the UK joining the European Union in the next few decades at least, if that even happens. But it provides a skeleton that the two sides can work around and can ensure that there's minimal disruption. And for the UK, it means tariff-free, quota-free access. It means meaningful break from the European courts. It means big control over the UK's new points-based immigration system. And it means, in terms of that elusive concept of national sovereignty, it does mean that the UK now has a more directly accountable and transparent national democracy. So for the Leavers and the Brexiteers in the room, actually, today is an incredibly big moment in the history of their democracy.
There's still a lot to be worked out. It doesn't mean we can stop talking about Brexit. What are the big questions still to be determined?
Yeah, so the big questions will be around things like services, like financial services, like the ongoing relationship beyond the provisions that have been set out in the thin deal around things to do with different sectors of the economy, how they're going to be integrated over the longer term. We've still got a big question mark over what we mean by global Britain. And Boris Johnson today in his speech will probably start talking about the need for the UK to be signing as many trade deals in 2021-22 with non-EU powers as is possible. We've also, I think, got an interesting moment for the European Union here too, by the way, which very few people are pointing out. This is the first time in the history of the European Union that a major power is leaving. And so for the European Union, this is going to raise some big questions over who's going to contribute to that budget, how they're going to negotiate and move on in the wider world without the United Kingdom. Now, they may say today this is not going to be a big deal, but it is a big deal. It's a huge deal for the European Union. So we've got some really big geopolitical, strategic things still to unfold.
In the time we've got left, Professor Goodwin, help me with Tier 4 and the politics of Tier 4. Is it to the point where it's just what it is, or is it really a labor-Tory divide?
I wouldn't say it's a Labour-Tory divide, Tom. I'm talking to you from Tier 4. I'm in North London. It is essentially a full lockdown as we grapple with now 2 new variants of COVID, not one. We've now got this second South African variant, which the country's dealing with. My prediction here will be that the entire country will be in what's called Tier 4, almost full-blown national lockdown as we go into January and February. But let's not forget the vaccines are here, they're being rolled out. My mother-in-law actually had her vaccine last Sunday, Tom. So this is happening. We are moving into that exit strategy as quickly as possible. And that's what's keeping people, I think, hopeful about 2021. It will be not a smooth recovery, but the recovery, I think, is coming.
Professor, thank you so much. Matthew Goodwin at the University of Kent, Professor of Politics and International Relations. Lisa, that is one of the items here overnight, and there's some confusion here. 1 million vaccinations in America, but these numbers are really movable right now. It's a question, Lisa, as you and I learned yesterday, you got to get up to 60% of the population. That's a long ways away.
In order to get that herd immunity. And in the meantime, one thing I was wondering is the supply chain disruptions that we've seen. And there have been some delays in the deliveries in the United States, among other areas. And it's just a question of how much more does that delay when we get that 60%. I don't think we can do this for that much longer, Tom. Not this. This is great. I mean, like the pandemic.
Yeah, well, that's questionable about this as well. We're going to come back and be with you all through the morning. Christmas Eve, folks, and we're, you know, in the strangest of strange Christmas Eves, we're enjoying ourselves, and we hope you do amid this pandemic. We're going to do much on the markets, and with us, thrilled on this Christmas Eve, Kit Jukes with us with Societe Generale. And yes, we'll look at the weak dollar consensus that is out there, the weak dollar in evidence right now, but mostly strong pound sterling. Stay with us. This is Bloomberg. Good morning.
Some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need is surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
is undergoing an economic amputation. And basically having a thin Brexit deal at this point is saying there were no complications from the surgery.
This still looks like a pretty disastrous step. Perhaps they're making best of it now, but I've argued frequently, this looks like the worst decision in peacetime made by any country ever.
I'm talking probably 140 plus within, the first quarter or two of next year. It's been my contention that a deal will get across the line at the 11th hour for a little while. And I think there's a lot of upside in the pound to go in that scenario, just as that risk gets priced out.
John Farrow is off. We've got wall-to-wall Brexit. Yes. Bloomberg guests offering their views on the Brexit trade deal set to be announced. Bloomberg surveillance, Lisa Abramowitz and Tom Keene. Tom Keene, our next guest, noted that he tunes in occasionally at odd hours, and you're always on. So Merry Christmas for someone who notices just how hard
you get a life. Jukes has to get a life.
Well, which one? Hey, we drink on set. It's all good. Joining us now is that very one and only Kit Jukes, Societe Generale Chief FX Strategist. Kit, what is your take on the effect for the pound after this potential Brexit deal that may or may not be signed off on today? I'm looking right now at the pound dollar at 136, touching, just kissing up at that highest level since 2018.
Relief. You've got a lot of positioning, particularly in the options market, of people protecting against sterling falling on no deal, because, clear that no deal during a pandemic was as bad an idea as you could possibly imagine, even worse than Danny Blanchflower's worst idea of all. And so I think I'm on the side of people that thinks we won't go in a straight line, but we'll go to 140 in the early months of next year, certainly. Most of the move from here, though, is going to be sterling from now following the euro. So if euro-dollar goes up from these levels, I think sterling will rise with the euro against the dollar. I think sterling is now just this morning in the bottom half of the range it's traded in against the euro, so the stronger half for sterling, since the referendum. That's the right place for it to be, but it's not far off in the right price sort of area now at last. So most of the story for where sterling dollar goes depends on the euro going higher and the dollar being weak because Jay Powell keeps rates low. We've got a little bit more. We'll get some positions out and we'll get a bit closer to 140 on this initial euphoria, but not much.
Are we going to be talking about Brexit again when we talk about the pound, or is this behind us? We now talk about the state of the economy.
I think this is nearly behind us. Remember, we've got scrutiny by the British Parliament. We've got scrutiny by a whole host of parliaments in the rest of Europe. So we'll go on talking about that and we'll worry a bit. And then we'll get round to talking about other trade deals on services and so on. But mostly, the big question is that from a position where the UK economy looks to have been, of the major economies, the one that suffered most in the pandemic and is going to be hampered even by a Brexit with a deal through next year, what can Boris Johnson do to improve the medium long-term outlook for the British economy from where it is now? And that's what limits the upside to sterling.
Get you, the assumptions of 2021 outlooks hinge on weak dollar, up international equities, and of course international equities out front of that belief have been a moonshot. All my radar's up on that. How do you hedge against that, or do you need to hedge against the certitude of weak dollar?
You need to be careful with all of them. The big problem with 2021 outlooks is that a lot of the move happened in Q4. And so the weak dollar, the weak dollar happened before we get there. So we need to beware the fact that in some markets we're ahead of ourselves. And foreign exchanges is a good example of that. And then we need to beware the big thing of everything. I can't remember a time when everything was so dependent on the combination of, vaccines delivering good news eventually, which I'm pretty confident of, and the Federal Reserve underwriting the whole thing by keeping rates down here until 2023, which I'm confident of every time I hear Jay Powell, and less confident of when I look at the dot plot that the Fed produces and things like that. But those are those are the two foundation stones of all of this sentiment and all these consensuses.
Well, no, but I think it's really important what Mr. Chuk says there, folks, is that we're way out front here as well. Do you just assume then that the international enthusiasm will be dashed as we go through 2021 due to currency compensation?
I think the enthusiasm takes a pause. You know, what I'd like to see is what we saw with, for example, Eurodollar hit 120 back at the end of July and then went sideways for 3 months and then lurched higher. I would like to see consolidation in all of these markets for 3 months. I would like to be bored to tears of markets for 3 months before they make their next move, please. I mean, then that would be healthy. But we have to be, you know, we've seen a lot of New Years when we've gone backwards. I don't think I would like the idea of general pandemic fears returning, concerns about alternative strains, sell-offs in equity markets, nerves around the U.S. political process after the results in Georgia, whatever happens there, and all of that kind of thing coming in to give us a big risk-averse move in sort of correlated the other way. That doesn't sound like a fun outcome, but that's not at all inconceivable. So I will tread warily into the start of next year.
Kit Jukes of Societe Generale staying with us to talk about a Tier 4 lockdown Christmas and what that means for everyone, as well as the weakening dollar. Coming up on Bloomberg Surveillance, Robert Albertson, Piper Sandler Chief Financial Strategist. That's 6 a.m. in New York, 11 a.m. in London. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. It's a sign of how low yields are pressuring money market funds. Fidelity has waived nearly $250 million in fees and expenses for its largest fund. Without the waivers, investors in the $212 billion Fidelity Government Money Market Fund would have faced negative yields on their holdings. Robinhood has been hit by a proposed class action lawsuit. The popular trading platform was accused of failing to inform clients it was selling their stock orders to other companies and effectively charging backdoor commission fees. Last week, Robinhood paid $65 million to settle similar allegations from the SEC. And Bloomberg's learned that digital payment company Square has held talks about buying Jay-Z's music streaming service Tidal. It would be part of Square's push to diversify. Square CEO Jack Dorsey has discussed a potential deal with Jay-Z, the rapper and music mogul. The talks may not result in a transaction. And that is your latest Bloomberg Business Flash, Lisa.
Thank you so much, Ritika. Nothing going on in markets, but certainly not in bonds. Equity is just trying to creep higher. 0.2% gain we're looking at in the S&P futures, but really it's weaker dollar, Tom, and that seems to be also on the heels of euro strength.
That headline Ritika Gupta just had, Lisa, on Fidelity providing cover for low yields in money market funds. Boy, is that a next year headline.
It's the reason why a lot of companies are actually moving away from money market funds. They just can't make money.
Screams 2021. Coming up, Robert Profusek of Jones Day. This is Bloomberg. Good morning.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Live from New York. I'm Lisa Abramowitz alongside Tom Keene. Francine Lacroix is off. We are looking at pictures of the coast of the United Kingdom. We're looking at pictures of Dover, the ports that were reopened, Tom, after being shut down by France in particular on fear of that new strain of COVID.
8 years to build, and it was the Channel, as it's called, and it's 50 kilometers. I'm going to call that 30 miles underneath, and it is absolutely vital. What a joy to speak to the head of the Dover port the other day about the basic message I heard from Mr. Bannister, Lisa, was when we go, and I believe the going is going right now.
Yeah, it's going, although there were reports of some of the log jams with some of the drivers getting tested. In the meantime, you've got a United Kingdom, perhaps somewhat more connected, yet still in Tier 4 lockdown. If you go to London, where Kit Jukes is sitting in his bathrobe and waiting for Christmas, waiting for Santa to come and drop some dollar weakness, I guess. Kit Jukes, Societe Generale, still with us. Kit, what's Tier 4 Christmas like?
Tier 4 Christmas is actually, it depends where you are. So if you were planning to go somewhere else for Christmas, you're trying to find something to celebrate with at home, having not been prepared. And if you were expecting other people to come to you, as we are, you're going to spend Christmas eating far more than is good for you because you've, got enough meat for twice as many people as there are in your house today. But at least, and we should be positive about something, the sun's shining. It's cold but sunny today, supposed to be tomorrow. So I'm going to barbecue tomorrow.
All right. Well, good luck to you. Share with some friends, try to ship some over to the U.S. There is a question of whether people will continue to also get what they want in terms of currency trades, the dominant trade. How about that for a segue, Tom Keene? The dominant trade being a weakening dollar. We are getting that today. How much further does that have to go as we do see negative real yields reassert themselves in a major way in the United States?
Look, I think we've probably done half the move. So the dollar is a little under 10% overvalued, I would judge, from now in terms of where it is overall. We'll get more of it. I mean, if we can have what we wish for, I would wish for a V-shaped global economic recovery where money flows out to some of the countries that have had a hard time, where we get capital flows to some of the emerging market countries. If they continue to struggle, and the danger is that they will, the dollar can only fall more slowly. There's only so far the euro, for example, can rise if a lot of its trading partners don't see their currencies appreciate. And if everybody wants to make us all happy, the Chinese will help out by letting their currency strengthen as well.
Kit Jukes, Chelsea Arsenal here in a couple days, and Arsenal's really under threat of being relegated if they lose this game, that game, and another game as well. But one of the great triumphs of resiliency, Kit Jukes, has been Premier League football. Compared to the American sports, to me, it's been just extraordinary how they've pulled that off as well, and it speaks to the resiliency out there. How fast do you perceive society will spring back when we finally get vaccinated?
I think the post-vaccine rebound is going to be incredibly V-shaped and quick. I can't, the scarring we saw after 2008 when we had to rebuild the financial system to be safer and when we had a lot of lost jobs took a long time, and we've still got legacies about it. And that's what you expect. This time is different was a great title for the book to cover that. This scarring, it seems to me, we're like a coiled spring, frankly.
Right.
Let us loose and we will go forth. And the vaccines, as fast as they get there, will do that.
Then do you assume an underpinning to the world of Societe Generale is a recovery in world trade volumes?
Yeah, look, world trade, trade in goods has been remarkably healthy through this pandemic. The Chinese have been big beneficiaries of it, but we've sat at home buying stuff online like loons. We have definitely, retail sales in both sides of the Atlantic have been much stronger than you might have expected. I think the really big beneficiary will be things like tourism, things like, there are people who are longing to go away from the country that they're in when it's safe to do so, all over the place. You hear that. And go out and go to the theater and go to the games. It's great, I had tickets for one game of football, and then we went into Tier 4. So, I'm paying for these. I'd like to go and see some games myself, thanks. And all of that, I think, we will get back to doing very fast around the world.
Kit Jukes, a Christmas Eve to you. Mr. Jukes of Societe Generale has been such a benefit to all of surveillance through this year. Lisa, we've been showing the images of Dover, and yes, the port, huge ferry business and huge autos, trucks, lorries, and tunnels as well. But there is also the White Cliffs of Dover. We forget the grandeur of the Key of England, don't we?
This is about as close as we get to traveling in our claustrophobic pandemic world. So we'll show every picture that we can. We are looking definitely at a moving, actually, it's not quite moving yet, although it has been an active channel of trade re-engaging on the pandemic concerns.
And again, the confidence that we heard from Mr. Bannister of the Dover ports was really remarkable. We may hear some of that conference. There is a confusion over whether the Prime Minister will hold a press conference. It was scheduled earlier and unscheduled right now, but our team at Queen Victoria Street is monitoring to see if and when we will hear from the various parties of this historic day for Brexit. Futures up 10, Dow futures up 81 in shortened trading in bonds and equities in the United States today. With our first word news in New York City, here's Ritika Gupta.
Thanks, Tom. Republicans are likely to block House Speaker Nancy Pelosi's bid for $2,000 relief checks. That's according to a person who took part in a phone call for Republican House members. Pelosi took up President Trump's demand for larger payments to individuals in the Coronavirus Relief Act that Congress passed. She wants to seek unanimous consent to increase the payments, but all it takes is one lawmaker to stop that. And President Trump has vetoed the $740 billion U.S. defense policy bill. That set off a battle with Congress that could result in his first override by lawmakers. The president called the measure a gift to China and Russia. He wanted to attach to the defense bill an unrelated provision to eliminate the law that protects tech companies from liability for most content published by users. President Trump is again calling for a special counsel to investigate election fraud. The president's latest demand came on Attorney General William Barr's last day in office. Barr has said the evidence doesn't merit a special counsel. Now the White House pressure will go on Barr's replacement, Deputy Attorney General Jeffrey Rosen. The U.S. now leads the world when it comes to the number of people receiving the coronavirus vaccine. More than 1.1 million doses have been given in the first 10 days the shot was available. 3 states have vaccinated more than 1% of their populations: North Dakota, West Virginia, and Alaska. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Lisa, Tom.
Ritika, thank you so much. It is a story we've been a little bit tilted away from as we look at the financial markets and look at what we see within the global trade system. But that is, of course, the president in his actions of the last number of days, including pardons and commutations. Peter Trubowitz is truly expert on this at the London School of Economics, a legend at the University of Texas over the many decades. And we are thrilled on short notice that Professor Trubowitz will join us. Futures up 10. This is Bloomberg.
you changed as a leader since that day in 1993 when you joined Roche?
You develop over time, and it's a series of experiences which hopefully make you a better leader.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Good morning, everyone. Bloomberg Surveillance on this Christmas Eve, and we welcome all of you around the world and across Europe, and excitement in Europe over a possible solution to Brexit. We'll get to that in a moment. Lisa and I looking for a press conference, and some images beginning to form up at 10 Downing Street. Really unsure on the timing of this. I no doubt getting the comments right will be very important. Joining us now from London with the London School of Economics, their professor of International Relations, Peter Trubowitz, who is truly expert on the fabric of American democracy with his work at the University of Texas over the many years. Peter Trubowitz, George Washington generated 2 pardons for the Whiskey Rebellion. We've now come to something very, very different. How does President-elect Biden and future presidents adapt to what we've seen from President Trump?
Well, they're going to have to change the way the pardon power is being used. I mean, normally presidents use the pardon power, as you know, Tom, to right wrongs, basically to correct miscarriages of justice, and that's not what's going on right now. Most of those that Trump is pardoning have a personal or a political connection to the president. And, you know, I mean, Trump has issued fewer pardons than past presidents, but what is noticeable about it is that the pardons are really towards, he's granting them towards close allies. And this is something that the Biden administration and the Congress are going to have to focus on. You know, there may have to be a constitutional amendment. I think that would be very hard to get through, but there's got to be some focus on the norms here that have really been, you know, trampled on.
Well, then how do we do that within our democracy and the huge gridlock, the battles over each and every issue? Is it a formation of a special committee by President-elect Biden to say, let's study this for X number of years?
Sure, why not? Or not X number of years, but a certain number of, over several months. Look, if he were to push something like that, that tied his own hands as well, it would be credible, or more credible at any rate, and something that he might be able to push through Congress. I think a lot there will depend actually on what happens on January 5th down in Georgia. But, you know, I think if Biden were to push something, some set of proposals that he had to live by, it makes it more credible. I think everybody realizes that what's going on right now is just beyond the pale.
There's a question of the isolation of this current president, not only in general from the Democrats and from Congress as a whole, but from Republican leadership, especially as he vetoed the defense bill last night and is threatening to veto the $900 billion fiscal support package that had passed by both Senate and the House earlier this week. What does that tell you? How significant is this fissure between President Trump and the Republican leadership?
Well, I think it's pretty significant, and it certainly, I mean, it puts a lot of Republicans in a pickle. The veto on the defense bill certainly does that, because they're facing either, if they override the president, they join the Democrats and they override him, a tweet storm for sure. But if they don't override him, basically they're voting against a pay increase for the military, which I think is just too much for most of them. So there's going to be an override. But I think the thing is that what they're worried about, you know, proximately, are the implications of Trump's actions for the special election that's taking place in Georgia on January 5th. I mean, look at those two Republican senators, Loeffler and Perdue. They both have backed the relief bill, right?
Right.
Only to see Trump now savage it. And so they're forced into a position now where they actually, they may have to eat their own words in public. And, the Democratic candidates are just having a field day with this right now.
I love how 2020 that comment was that the Republican leaders risk a tweet storm from President Trump, that this is a serious and viable threat. There is a question of President Trump's power in the Republican Party among voters. In other words, are voters in Georgia going to the polls to vote for Trump's Republican Party or for a Republican Party independent of the president?
Yeah, so, this is a great question, and it is kind of like the outstanding question. Look, I'm not saying that I think that Trump will definitely veto the COVID relief bill. I think what he's doing right now is what he has been doing since day one of his presidency, which is flooding the news cycle with so many stories and controversies that the issue that he's most worried about, which I think is scrutiny of the pardons, basically doesn't get the attention that it warrants. But what this does is it puts Republicans in, it whipsaws them. Right. And it also shows Trump's strength post the Trump presidency.
Peter, just because of time, I need to get this in. It's so important. 13 years ago, you wrote a definitive article on the grand strategy of America and a divided America. You hearken back to the Whigs of 1840s. Wither the Republican Party in 2021 into the 2024 election. Do they threaten to be modern-day Whigs?
Look, I think that Joe Biden's going to have his hands full, even if the Democrats pick up those 2 seats in Georgia, which is a long shot, but, so that they control the Senate. And that's because the country is still so polarized and political secularization has really taken hold that, it's going to be very hard on the foreign policy front to really do programmatic things. His focus, that is Biden's focus, is going to be domestic, principally, and many of his foreign policy positions are going to be judged by what they do for the country domestically. That is what kind of dividends they pay.
Now, Professor, thank you so much. Professor Trubowitz with us with the London School of Economics, and of course we thank you for all you've done for us this year. Coming up later, the Washington conversation, we drive it forward. Something we haven't talked that much about, hacking. David Weston in conversation with Christopher Painter from the State Department and on cybersecurity. An important interview. This is Bloomberg. Good morning.
新型にはなんと2万点以上全身でついてます。なので2万点あることにより、その情報が取れない、平面がないんですね。なので全てをスキャンすることができるので。 どちらにせよ自分のサイズを一回最初から、適正なものを発見してそれを買って、家に届いてきたらぴったり非常にハッピーというのがやっぱりしかるべき姿かなと思ってます。
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Bloomberg Surveillance. Good morning, everyone. On this Christmas Eve, Lisa Abramowitz and Tom Keene. Thrilled you're with us. Futures up 10, Dow futures up 81. Watching Sterling 136.12. He is certainly the man of the year. Anthony Fauci, with his leadership in the crucible of this pandemic, has been absolutely extraordinary, from St. Regis High School on the Upper East Side to Holy Cross, and then to his sterling career in medicine, in virology, and in comforting a nation. His conversation with David Weston.
For at least 5 or 6 hours after the injection, I didn't feel anything at all. I mean, less so than a flu vaccine. Then a late afternoon, early evening, I started to get a little bit of an ache, really nothing to distract me or bother me, but just something that when I press on it, you could actually feel it. Had a good night's sleep last night. I didn't get, a lot of muscle aches or anything. I mean, I felt something a little different, like there was something going on, like maybe a little warm, a little flushed. Woke up this morning, I feel perfectly fine. The only thing I have now is that where the injection site is still is a little sore. But when I say sore, I mean really not very distractingly sore, just baseline, borderline.
If there are side effects, how quickly would they kick in?
They usually all occur within the first 12 hours, and they last between 24 and at the most 36 hours. It's extremely unusual for someone to have something beyond 36 to 48 hours.
Now, you said in getting your inoculation, it was for two reasons. First of all, you were a physician. You were actually treating patients. But secondly, you wanted it to really represent to people that this truly is safe. We don't need to be worried about it. Do you have a sense that there is much resistance at this point in the vaccination program?
It's getting better, thank goodness. When we did surveys, a month or so ago, there was almost 50% of the people had some reservations or skepticism about getting vaccinated. The last survey, which was just last week, they said that more than 65% of the people said that they would be willing to get the vaccine. We really want to get that up even much higher than that, because the projection is that if you get anywhere between 70 and 85% of the population vaccinated, you would create an umbrella of immunity over the community, which could really get the level of virus so low that it would not be a threat. And then you could answer the question that everyone seems to be asking appropriately, is that when can we start approaching some degree of normality? When can we be doing things like safely having the children in school, or going to a restaurant and sitting indoors, or going to a movie theater? I would think if we start getting the general population vaccinated, let's say mid-April, between now and then, we're going through the various priorities. We started off healthcare providers and people in nursing homes and long-term facilities. The second level is people over 75 and individuals in what's called necessary or important places in society to keep society running. And that could be anything from a police officer to a fireman to someone who runs a grocery store so people can get food. When you get through those priorities and you get to what I call open season, like anybody can get the vaccination, even though you're not in a priority group, I imagine that's probably going to be sometime in April. And then if we can really get vaccines going in April, May, June, July, and August. By the time we get to the end of the summer, I think we can get to that goal that I'm talking about getting the overwhelming majority of the population vaccinated.
Dr. Fauci, we should be running that on the hour here at Bloomberg Worldwide. That was beautifully clear, getting up to that 70% level. Lisa, to me, the data you need to know from the good gentleman from Holy Cross is he got a good night's sleep last night. That's something you and I haven't seen in weeks and weeks and weeks.
I was about to say, maybe I can get a good night's sleep after someone sticks me in the arm with the needle. And I know at some point I can get back on an airplane and return to real life, Tom.
Very clear walkthrough there. Our clarity is on the data. Futures up 9, Dow futures up 73. VIX comes in. It was in a stick at one point, 22.44. Lisa, I'll let you warble on gaily about the carol, if you will, of the pound sterling.
Warble on, wow, I don't know that I can meet your expectations. We are seeing pound strength after we do have signs that they will sign a Brexit deal, avoiding the worst case scenario of a hard Brexit. There is a question how much this is really just coming on a weaker dollar story, classic risk on feel. We're ending the year on a risk on tilt with S&P futures climbing a little bit more, up 0.25%, and yields now ticking up just a little, but super quiet, not really telling us much.
On this Christmas Eve, looking at the markets, of course, and looking at the beauty of southern England, of course, one of the truly historic pivot points of Western civilization, Dover, the path down from London,
it's like we're
through
traveling.
Canterbury and Kent, to that tunnel, built in the 80s, built in the 90s, and the need to get transportation moving again. Stay with us. Jennifer Nuzzo, Johns Hopkins Center with us. This is Bloomberg. This morning, it is a gift that keeps on giving. President Trump, he overrides courts, juries, overrides prosecutors, and grants clemency to loyalists. The president sees, quote, a hoax, misconduct, and injustice. Sass of Nebraska says, quote, this is rotten to the core. For the first time in 53 years, a president vetoes a defense spending bill. It is, quote, a gift to China. Congress must override the veto. And it is Christmas Eve amid the pandemic partition. There is no relief or stimulus, but there is news on Brexit. We await the Prime Minister of the United Kingdom and Ms. van der Leyen from Brussels on a Brexit solution. Dover may reopen. Good morning, everyone. This is Bloomberg Surveillance. I'm Tom Keene alongside Lisa Abramowitz here in Christmas Eve, New York. And really, Lisa, you know, it's been a story since John Farrell was on the podium, I don't know, 3-4 years ago in June of the Brexit shock. And maybe here we are to actually a real announcement.
Yeah, because John Farrell left last week and said, Meg, you speak about Brexit all of next week.
He's been working in background on this.
Exactly. He's been trying to orchestrate the whole deals and get them to the table. This is potentially a breakthrough, though, after almost 5 years of very contentious talks.
I can't believe that. 5 years.
Almost
extraordinary.
5 years.
Christmas Eve, shorter trading day, bond market at 1. I believe the equity market at True Futures up 10. Dow Futures up 72. We'll do some data here in a moment. Sterling, of course, all watching, advances 136.03. We've got in your stocking right now, Robert Albertson will join us here in a bit. Thrilled to have him with us. With our news in New York City, here's Ritika Gupta.
Morning, Tom, Lisa. President Trump has pardoned his 2016 campaign manager, Paul Manafort. Manafort had been convicted of financial crimes and illegal lobbying. The president also pardoned political advisor Roger Stone. He had already commuted Stone's sentence for lying to Congress. Also pardoned the father of the president's son-in-law, Jared Kushner. Charles Kushner was convicted of crimes that included witness retaliation. House Speaker Nancy Pelosi is hoping to seek unanimous consent to increase the individual payments in the stimulus bill as President Trump demands. The House Republicans are likely to block the attempt. That's according to a person who was on a call with GOP lawmakers. If the attempt is stopped, the Democrats will introduce a new bill next week that would raise the payments from $600 to $2,000. The UK and the European Union have resolved their differences over fishing rights, and now they're set to unveil a historic post-Brexit trade agreement. Negotiators worked through the night to polish the compromise. The deal will formally complete the UK's separation from the EU 4.5 years after the 2016 referendum. And China is targeting billionaire Jack Ma's Alibaba empire in a monopoly investigation. At the same time, regulators have summoned Alibaba's affiliate and Financial to a high-level meeting over financial regulations. The pressure is on Ma in part of a broader effort to rein in the increasingly powerful internet sector. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom?
Ritika Gupta, let's rip up the script right now on the data check with futures up 9 as well. Turkey acts, they raise the rate to defend the lira, and they do. Lira breaking down to new strength on Turkish lira. 7.58, remarkably distant from that 8 panic level. The intraday chart showing a spike down, not through where we were a couple of weeks ago, but nevertheless, a new Turkey, a new strategy into 2021.
Yeah,
Lisa?
perhaps capitulation to what many in the market were saying was
absolutely.
inevitable. Meanwhile, what we're seeing elsewhere is basically the day before a holiday that does close early. We are seeing that lift to futures, but really yields absolutely steady. Weak dollar, however, persistent throughout the morning. And Tom, we are seeing the Bloomberg Dollar Spot Index fall to about the lows of the session.
There are 14 ways to go with Emily Wilkins because it is not a holiday for her Capitol Hill. It is decidedly exhausting, historic, and changeable by the moment. Emily Wilkins joins us, our government and congressional reporter. Emily, is overriding a veto of the defense bill, is that a routine affair?
Usually, most presidents do not veto the defense bill. That in itself is not a routine affair. Congress is gearing up for what could be the first time that they override one of Trump's vetoes. Democrats plan to vote to overturn the veto on Monday. They have the votes to do it. We don't have any firm plans yet from the Senate, but I think most lawmakers there realize the importance of having this bill passing.
Without exception, every single person I know is benumbed by your world, by Kevin Cirilli's world. What does this chaos mean for the Georgia elections?
So focus in here on those $2,000 checks that Trump called for. He called for them, and immediately the two Democrats, Jon Ossoff and Raphael Warnock, seized on them, and they were like, absolutely, American people should get $2,000 more in checks, and David Perdue and Kelly Loeffler, the Republicans, they should back them. And we haven't really seen anything concrete from either of them yet. Both of them kind of fall into that Republican camp that they were concerned about having the stimulus check be too big. They want to sort of limit government funding, and obviously approving these larger checks would go against that.
Can you paint a narrative as to President Trump's goal, what he's going for with the veto, both of the defense bill as well as his going against Republican leadership when it comes to the $900 billion fiscal support package?
I think Trump is in the last couple weeks of his presidency, and I think Trump is trying to be Trump in a way. He's on the one hand of the pardons. We're not really surprised with the number of the people who he's pardoned. There was discussion about pardoning them weeks ago. These are his loyalists. These are his allies and supporters. With the $9 billion, Trump has tried to talk about giving the American people more money before, something that he believes puts himself in a positive light. The timing's a little interesting because the time to have that negotiation would have been before the bill got passed. But it seems like he's trying to maybe put extra pressure on both Republicans and Democrats to move at this point.
Do we have a sense, Emily, of the voters and whether they're along with President Trump in believing that this is the right move, or is there a pushback and a bit of siding with the Republican leadership in Congress?
I think most Americans, when you ask, they would prefer to get $2,000 rather than $600. Look, though, a number of Republicans in the Senate are really concerned about, spending more money. They're concerned about a bigger deficit, a larger amount of debt. But we have seen some Republican support for the $2,000 checks from lawmakers such as Lindsey Graham. We don't know yet whether or not this measure will be able to pass the Senate, but we'll see what happens after the House votes on the measure on Monday.
Emily, thank you so much. Greatly appreciate it this morning. Bloomberg Surveillance, and we welcome all of you. Coming up next, we're going to get right to it with Robert Albertson, including my chart of the year, which is a chart that Mr. Albertson is thrilled that the gentleman from Piper Sandler is with us. This is Bloomberg. Good morning.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Valuation
valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Bloomberg Surveillance, good morning, everyone, on a Christmas Eve. Lisa Abramowitz and Tompkin, and we are thrilled you are with us. We're going to rip up the script right now, and we can really do this with Robert Albertson. I love his research notes over the years with Piper Sandler. Robert Albertson, of course, truly legendary on clarity and acuity of notes. Robert Albertson, it almost is Econ 101 back to Carnegie Mellon a few years ago, which is international economics is immovable. If you get runaway inflation, you have to defend the currency, and that's finally what Turkey is doing.
Correct. And hopefully that's not what we have to be doing. But we're getting close to a tipping point, Tom. That's my belief.
What is your measurement of the magnitude of dollar weakness? Stephen Roach of Morgan Stanley and, of course, Yale University has a larger magnitude than many. What is the Albertson magnitude of presumed dollar weakness?
Probably close to his. It's still hard to tell, and it's also hard to decide what a new Fed chairwoman is going to do. A new Treasury Secretary is going to do vis-a-vis the dollar.
Robert Albertson, I need to go to the heart of your research note, which is your estimation and calculation, frankly, much like the liberal economist Claudia Sahm, that the all-in stimulus that we're doing with monetary and fiscal stimulus is not the childishness of $900 billion under $1 trillion or $2 trillion or whatever, but you have an all-in sum calculation of 11 to 12 trillion. How do you get there?
Well, I take virtually everything that the Federal Reserve put up for support as well, which is close to $6 billion. And then I'm assuming we do at least another billion after this. So it's somewhere in the vicinity of nearly half the GDP, which is exceptional. And credit to Lisa, she always keeps correcting people to say it's not stimulus, it's support. And I think that's a critical point.
See that, Lisa? I mean, under the stocking, under the tree, under the mistletoe, Lisa gets the love. I don't get the love.
Well, Robert, thank you very much for that nice little package of a compliment. I will definitely hold it over Tom's head going forward, although he gets plenty of love, I do assure you. There is a question you mentioned earlier when we were talking about Turkey, the tipping point, and when it comes to the United States, as the U.S. continues to print money to try to plug this productivity gap, when do we reach a tipping point where it is unsustainable to preserve such low interest rates with a weakening dollar and an improving economy?
I simply don't know. I've tried to guess this all along for several years. I do know one thing. Unless the foreign buyers come roaring back at the Treasury auctions, Americans are going to have to buy roughly 3 times whatever they bought in the past in terms of monthly auctions. It's just too much. There has to be some rate relief, if you will, increase to attract the investors. But it's hard to tell, and it's also hard to tell when inflation appears, and it's probably going to appear and disappear quickly. It's a temporary thing. But I think in the end, we could get there next year.
We could get there next year, and this is actually the big debate, I would argue, heading into 2021. A lot of consensus calls right now, but the one big risk everyone mentions is it's hard to know inflation. You said that it's hard to game out. What are you looking for to give you a hint of whether we're on that precipice of challenging the Fed to start talking about raising rates due to increasing inflation?
Well, despite the fact they poo-poo it, if you look at wages in terms of percentage growth, it's been rising steadily for several years. It's not a big percentage growth, but it is clearly a rise. At some point, we're going to have a supply imbalance here where we get a spike up, and then we probably come back down again. But I think there has to be some impact from inflation going forward. And also remember, inflation often becomes a psychological thing as much as it is a fundamental.
Robert Albertson, your notes of legend are fancy logarithmic charts telling a story. Tell us the story of the instability to come. Which vector do you worry about being destabilized?
Well, my biggest concern is with business investment, business spending, CapEx. We've had a V recovery, but that's entirely in the consumer sector. If you want to generate ongoing jobs to keep the consumer going, you're going to have to do much, much better with business investment. And we just haven't seen it. It's up maybe halfway to where it was, whereas consumer is already above where it was before. That's my principal concern. And then there's structural things. Most importantly, that we've got a participation rate all the way back to the 1970s.
Oh, this is wonderful, and we will continue with Mr. Albertson. We are thrilled to have Robert Albertson with us with Piper Sandler today. It is a time of year where some of us walk away, some come back. We get through the last week of the year, and then we start strong. I'm thrilled by this. With my book of the year, Daniel Yergin, The New Map, with Ian Bremmer, our annual Eurasia Group Top Risk Show, January 4th.
Se logra una sonrisa de parte de cada persona que utiliza el dispositivo, ya que se pone en situación, entre comillas, de una persona discapacitada. Y ven que lo sorteamos de una forma agradable, porque el simple hecho de sentarse en un dispositivo ya es agradable.
Nace MAT como una solución de movilidad a personas con discapacidad. Nace Mandados como una opción de generación de ingresos y nace MAT Tools como generación de ingresos y educación a las demás personas que no están en silla.
morning, everyone. Bloomberg Surveillance, Lisa Abramowitz and Tom Keene on this historic day for Europe and all of Europe. They awaited 10 Downing Street for comments by the Prime Minister and in Brussels by Ursula von der Leyen of a success of Brexit negotiations and a Brexit trade deal. We need perspective on this, and there is no one better within the Bloomberg world to give us perspective this morning than Anna Edwards. Anna, I do have to rip up the script because you are an expert on 22 April 2011, where Larry the Cat took out the first mouse at Downing Street. Viral now on Twitter is Larry the Cat taking out a pigeon in front of the press corps moments ago. What is the symbolism that the pigeon escaped from the grasp of Larry the Cat?
Such is our excitement, our anticipation about the Brexit narrative that we're now looking for symbolism in the movement between a cat and a pigeon. I can't tell you if this is Europe jumping on London or London jumping on Europe, Tom. I'm sure you could see it either way you like.
You and John Farrow, more than anyone I know, just done this tick by tick. Why is this time different, Anna Edwards?
As in, we might get a deal this time? Well, we certainly have an expectation of a deal, don't we? It seemed we had a red headline across the Bloomberg yesterday saying the outlines of a deal were in view, and that seemed to be code for, you know, it's really coming now. And the Irish this morning, the Foreign Minister of Ireland, Simon Coveney, talking about how he expected to see a deal today. There has been plenty of expectation, and deadlines have come and gone. And let's be clear, the deadline is the 31st of December. It is not the 24th of December, however much we want it to be, because many people would like to see this done and dusted today so that people can think about something else over Christmas. Let's not forget we're in the middle of a global pandemic in London, and the UK is certainly dealing with that. But this deadline might come and go like others, but we had been anticipating that we would get a deal, and they worked through the night, fueled by pizza, to work on all of the detail, in particular around fish.
All right. Well, aside from the imagery of a rat and a pigeon, there is a question of whether the big takeaway is that Boris Johnson caved. Is that really the narrative here in terms of how this deal got done?
Well, it's interesting, isn't it? If you're just looking at fish and where we end up on that, then everyone's going to be looking for how much of a reduction in EU fishing in UK waters are we going to see as a result of this deal. That's what the fishing community in the UK wanted to see. That's the very vivid imagery that the Brexit side has played with and jumped on throughout this. They've been standing up for the fishing industry against Brussels. That's been the story. And so we'll certainly be looking for any details there. We don't know what he's climbed down on or not because we don't have the deal yet. There is already, though, a narrative coming out of the UK government leaking, it would seem, their arguments as to what they've won and what they've lost. And of course, you would expect that to be deeply, deeply led by PR rather than entirely fact-based, perhaps. And we've got on the Bloomberg our own assessments of what's been leaked already. And it does seem as if the UK team is going to be trying to spin this as a big success for the UK. But of course, we'll have to wait and see the actual details before we can make those kind of assessments and conclusions.
And I was struck by the statistic that the fishing industry accounts for 0.15% of all trade between the UK and the European Union. This is not that significant when it comes to all of the volume going across the channel. How strong is the political pressure from fisheries? I mean, can you give us a sense of why this has been the singular issue that has decided whether we get a hard Brexit or not?
Well, it's even smaller than that, because if you think about the bit of the fishing pie that they're arguing about, is EU fishing in UK waters. How big is that? I was doing the maths earlier on, 0.13% of goods trade. So it's only of the goods traded that statistic applies to. And services is, of course, a big part of this. Services not set to feature in this agreement very much, we don't think. In terms of fishing, though, and why it's such a big deal, it's been held up as this really sort of totemic subject by the Brexiteers, by those who wanted this clean break, restoring sovereignty and borders and owning our waters. All of that is tied in with the Brexit narrative. It does play politically into Scotland and trying to hold the union together. If they can please Scottish fishermen, does that go some way to holding the union together? That is going to be one of the stories we're watching in the UK next year.
I'm so glad you bring this up. I mean, Anna, I'm now expert on this because I've seen almost every episode of The Crown. But what is the state of disunion right now? I don't think it's really It's certainly not in the U.S. newspapers and zeitgeist, and I really don't even see it in Britain as well. What is your estimate with all your interviews of the state of disunion?
Well, you can look at the polling and you can see that pretty recently we've had a majority in favour of Scotland going independent. And this is not playing on the front pages here either, Tom, because we've had Brexit, because we've had the pandemic. The pandemic has dominated everything in the UK. It's partly the handling of the pandemic in Scotland by Nicola Sturgeon and her SNP administration that's credited with driving some of that push for independence. But this is going to be a talking point next year. We have Scottish parliamentary elections in May, and around that a lot will hinge. If the SNP gets a mandate to rule in Scotland, very clearly saying we're going to push for an independence referendum, will London really stand in the way of them holding an Indie Ref 2?
And Ann, I do want to make note of the 30-pound bag of Hill Science adult indoor chicken recipe dry food you got for Lawrence the cat under his tree. Ann Edwards on the watch at 10 Downing Street, and of course her leadership at Queen Victoria Street with early morning broadcasts of our messaging every day. Lisa, a data check.
Well, no, before we get to the data check,
Please.
How long did it take you to research who's the cat again? Lawrence the cat.
No, there's no need to research. It's a memorized surveillance tradition. You know, well, Palmerston was a State Department, their white, Foreign Office cat. I mean, it's like a serious thing because, Lisa, you mentioned rats. There's no rats anywhere near 10 Downing Street.
I'm sorry.
But
I
you
made
mentioned
an error.
mouses. It's like a serious issue there. They're like, they're down there where it was 17th century and they're on the rivers. So, the cats are serious.
Let's check the data. That's serious too. Right now it's seriously not moving, which is the reason why we're talking about Larry the cat. We're looking at markets that are basically range bound, staying around a 0.25% increase on S&P futures. Yields doing nothing, dollar still weak, and crude, interesting, a little bit of a reversal today as we head into a choppy session. Tom.
David Gura emailing in from Brooklyn says, stop beating on cats. I have 3 of them. What is that about?
Well, we can discuss that in depth
David,
in the 7 a.m. simulcast.
As well. We have much, much more to speak of, and for those in America on this Christmas Eve, legitimate breakthrough of the Brexit negotiations. We await comments from the Prime Minister and from Brussels as well. Christopher Painter with David Weston later. This is Bloomberg. Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Good morning, everyone. Bloomberg Surveillance, Lisa Abramowitz and Tom Keene. It is a Christmas Eve, a holiday shortened trading day. A lot of economic data yesterday really showing a growth slowdown as well. Clear indication there. Hard data, soft data, both moving in the wrong direction. I am unimaginative, Lisa. I'm in a tier 5 lockdown in my brain, so I had to reach back for chart of the year. It is the single best chart. It's without question the latest I've ever done it. I was going to do inflation expectations in the U.S. rising up, but I have to recapitulate from 2 or 3 years ago our twin deficits. Take the fiscal deficit percent of GDP, take the trade deficit percent of GDP, add them together, and you're out a stunning, truly unimaginable 4 standard deviations. Robert Albertson is with Piper Sandler. And Robert, as you know, this is the great fear of so many, frankly, including Senator McConnell, of deficits out of control. Can we get ourselves out of this debt and this deficit?
No, I don't think so. I think we have to dive in even deeper, because if you look beyond the COVID situation, we need an infrastructure package beyond badly. I mean, it's just absolutely have to have it to keep growth going in this country. And we're going to have to pay for that right after paying for all the support that we necessarily had to do for COVID. It's just pushing the envelope, I think, rapidly. It's a double hit here.
It's a double hit here, but within that is the recovery through growth. Do you assume that billions and trillions of an infrastructure program, somewhat like the Apollo program of years ago, would lead to growth within the domestic economy, or is it just tangential?
No, I think it's fundamental. I think it's strong. I think it's a powerful lever. And I think it can keep us back up into the 2% trend line growth, or even a little better. Without it, we're going to drop to 1.
This doesn't sound like a reflationary environment. Do you not buy the reflationary hopes that people are pricing in next year?
Not yet. As I said, I think we're going to get some distortion in the inflation numbers partway through the year, and then it'll go away. I don't think that's going to change anyone's attitude. I think it's going to take another year of imbalance to trigger the psychology of inflation, which once it takes hold, will take care of everything else.
All right, so given your experience at U.S. Bank and Goldman Sachs, your years and years of studying the financials, do you think that the exuberance that's been priced in the past couple of days on the hope of more share buybacks and the hope of a steeper yield curve has been overdone?
Well, I think it's a second-rate reward. I think it's very important. Investors definitely want to see it. But it speaks of an industry which is having a lot of trouble showing fundamental growth, and the only thing that's coming out the door now is buybacks. I will say one thing. I think next year is going to be the launch of a very big consolidation wave. I think everyone's going to be surprised by the end of the year just how much more things get stitched together. Mm-hmm. That's typically what happens when you have brutal headwinds on bank earnings.
Robert Profusek with us with Jones Day here in a bit. Robert Albertson on Bitcoin. Boy, has it been a debate on this show, Robert Albertson. It's a generational debate, perhaps. Where are you on Bitcoin, you young guy, you?
Yeah, I think its time is coming. I still don't think it's so much Bitcoin per se, but I think the big change, if it happens, will be with the central banks coming up with a blockchain currency. I think that's going to be the big news. I think that's going to happen and kind of overshadow Bitcoin itself.
Robert Albertson, thank you so much for joining us on this Christmas Eve. Greatly appreciate it. With Piper Sandler and their chief financial strategist. Lisa, just so much to digest there as we look to 2021. To me, Lisa, I don't know if it's the major mystery of 2021, but the certitude of international equity advance that has all my radar up.
Yeah, well, it has a lot of people's radar up, and yet they're still getting on the train saying that just because it is the strongest consensus they've seen in their careers doesn't make it wrong. Bitcoin, are you moving your triple leverage cash fund to Bitcoin?
I get a lot of mail on this. I get some hate mail on this. I know you only get the love notes, but I'll tell you, Lisa, it is still a raging debate. And when you look at the chart, I mean, it goes up and then it collapses. And can they get beyond that?
Yeah, but it got to record highs recently and increasingly is taking market share, people say, from gold, which is interesting.
I don't know. I know Vet Bill's living larger, that he went in at 6,000 and, is doing...
He's buying Christmas dinner, the ham, right?
You got that right. Yeah, with his fair share. Futures up 8, Dow futures up 54, the VIX 22.55. With our first news, here's Ritika Gupta.
Thanks, Tom. Republicans are likely to block House Speaker Nancy Pelosi's bid for $2,000 relief checks. That's according to a person who took part in a phone call for Republican House members. Pelosi took up President Trump's demand for larger payments to individuals in the Coronavirus Relief Act that Congress passed. She wants to seek unanimous consent to increase the payments, but all it takes is one lawmaker to stop that. President Trump has vetoed the $740 billion U.S. defense policy bill that set off a battle with Congress that could result in his first override by lawmakers. The president called the measure a gift to China and Russia. He wanted to attach to the defense bill an unrelated provision to eliminate the law that protects tech companies from liability for most content published by users. And the U.S. now leads the world when it comes to the number of people receiving the coronavirus vaccine. More than 1.1 million doses have been given in the first 10 days the shot was available. 3 states have vaccinated more than 1% of their populations: North Dakota, West Virginia, and Alaska. Meanwhile, there's a new study out about the mutated coronavirus strain that's been spreading in the UK. It says the virus appears to be more contagious and will likely lead to more hospitalizations and deaths next year. The variant is said to be 56% more transmissible than other strains. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Lisa.
Thank you so much, Ritika. Coming up next, Bob Profusik, Jones Day Global Chair of M&A, on the incredibly hot market that has been 2020. From New York, this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is Bloomberg Surveillance live from New York. Tom Keene, Lisa Abramowitz here holding down the fort ahead of the Christmas Eve holiday that leads to a long weekend and almost the end of 2020, and probably there are few who are working as hard into the end of this year as all the M&A lawyers and bankers out there who are rushing to get deals done as activity heats up at a record pace. Robert Profusek of Jones Day, global chair of M&A, has been overseeing it all and riding this incredible wave. Can you give us a sense of the main driver, Bob, of this M&A that we're seeing? Is it simply that companies have too much cash and they need something to do with it?
Actually, I think it may be optimism tempered by a little bit of uncertainty just because of what we've been through. But I think it's really a sense that the light's at the end of the tunnel. Companies, after basically the M&A market shut down just like the rest of the economy in the second quarter, but it has been a complete ramp up ever since, and things are really moving quickly. But when you go through something like this, just like the financial crisis, just like the '87 crash, a lot of those things, you can't put the past completely behind you. So the idea of getting something done as a seller, locking in what are good values today, not so bad. And the math, because of low borrowing costs and high equity prices, the M&A math is pretty simple right now.
The M&A math is simple, but there's always a theme. There's always an angle. Is it M&A frenzy, Bob Profusek, due to a defensive strategy of we've got to affect the transaction so our competitors don't? What's the theme that you see into 2021 of the core strategy of mergers and acquisitions?
Well, it is a strategic market. There are plenty of financial things going on, and obviously, I don't really think of this as part of the M&A market, but the SPAC market has been just unbelievable. Probably more SPAC deals this year than ever before combined. But it's strategic. It's companies that have talked down and off for the last 10 years or whatever, deciding maybe this is the right time to do it. Some of it is synergies. In fact, a lot of it is synergies. And that's always a hallmark of strategic markets. But it's where are we going on the assumption that sort of the worst is behind us, even if there's a U-turn on the virus or something like that. And you're better repositioned before somebody else does. So in that sense,
right,
it is, you're right. It is taking advantage of an opportunity before someone else does.
Bob Profusek, is there a direct line from Jerome Powell and Federal Reserve accommodation to the business of mergers and acquisitions?
Yes. It was mentioned just in the last segment, the idea of these low interest rates locking things in at these costs. Obviously, it's very powerful. And in some sense, depending on your inflation assumption, debt capital for high-end borrowers is almost free. So, again, it has a big influence on the math of M&A.
Bob, when does regulatory pressure start to weigh on markets, the M&A activity, given the fact that there is an increasing amount of concern about the dominance of the haves, the large behemoths that have made out just fine, while the have-nots have absolutely gotten decimated?
Well, that's a factor. When you really stand back from all this, and I think about, what are the likely risk factors to this market? Well, one of them is exactly that. Is that going to exacerbate things? Is it going to change tax policy? Are we going to have protests and riots? Are we going to do all that stuff? So there's no question that that's a risk factor to the economy in general. And M&A is basically, in general, it's usually a harbinger of an economy to come. So if those things really start weighing on the economy, M&A will turn around quite significantly.
Is there
there's no question it's a factor.
Yeah. Bob Profusek, is there a linkage of M&A enthusiasm away from the big headline deals, which you are acclaimed for? Is there a linkage between M&A enthusiasm and the small cap surge we're seeing?
Yes, in the sense that, again, the multiples have a big effect. I had a discussion with somebody who said, well, how can all this be when all the target prices are up so high? But The buyer's prices are high. It makes transactions accretive, and particularly, again, I'm just repeating the same point, when you factor in synergies. The multiples are very strong. Now, is that real? Is it sustainable? I don't know, but the idea of building something strategic when you have an opportunity like this, too hard to pass up. Now, does that mean people are worried about debt costs going up right away? No, not really. That seems to be far off when you listen to the Fed. But it is a time to strike when the iron is hot. And part of it, I think, it's not just a relief from the circumstances we're in. It's a sense that there's going to be a very positive market environment. I've heard this more than a surprisingly number of times in boardrooms that maybe the next several years will be like the 1920s. And the point being, not so much that the 20s were a consequence of the World War II ending, but really the Spanish flu ending, which was a comparable set of circumstances. And the enthusiasm and all that stuff that people will feel if they're liberated from this environment.
Well, I hope that there is some sort of celebrating of the end of the pandemic. Next year, when you do see the mergers, which industries will be the most active?
Well, there's going to be quite a lot of activity it's been held back in spaces that are under pressure from technology, bricks and mortar retail, that sort of thing, because mall developers. So we've seen a big deal in the mall space, that sort of thing. It's going to be a lot of that. There's going to be a lot in the tech space, not so much in the big name tech companies, which even under the new administration are going to have to be a little bit careful about what they do. But in other spaces, whether it's payments processing, stuff like that, tech is always good. Even in Q2, when the M&A market was really at probably the lowest level in a decade, tech deals were getting done. So I think those are probably the two most significant spaces. And we'll see. There's always an element of consumer packaged goods and all that stuff. But I would say that it's the businesses under pressure that are going to have to combine and synergize to become more efficient, and things that are leading the charge into the new technologies.
Robert Profusek, Jones Day Global Chair of M&A, thank you so much for joining us, and have a wonderful holiday. Right now, let's get to the Bloomberg Business Flash with Ritika Gupta. Ritika.
Thanks, Lisa. Boeing is transferring final assembly of the 787 from the Seattle area to South Carolina, but it will still use a facility in Everett, Washington to detect and repair flaws in new 787s. That will involve aircraft that are already located there but haven't yet been delivered. About 1,000 mechanics and electricians assemble 787s in Everett. It's not clear how long the work will last. Airbus has solicited engine ideas for what is being described as a next-generation plane. General Electric has submitted a preliminary proposal that was disclosed in a court opinion that has since been sealed. It's not clear whether the Airbus plane would be a new model or an upgrade to an existing aircraft. And that's your Bloomberg Business Flash. This is Bloomberg.
have you changed as a leader since that day in 1993 when you joined Roche?
You develop over time, and it's a series of experiences which hopefully make you a better leader.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
You know, I would think if we start getting the general population vaccinated, let's say mid-April, between now and then, we're going through the various priorities. And then if we can really get vaccines going in April, May, June, July, and August, by the time we get to the end of the summer, I think we can get to that goal that I'm talking about getting the overwhelming majority of the population vaccinated.
We need to get to the point where we have herd immunity in the United States, frankly, around the world, to stop the spread of this virus. And experts think that 70 to 80% of the population vaccinated or have had the disease.
Commissioner Stephen Hahn speaking on Bloomberg Television on the hopes of herd immunity. We're all hoping for it, and the amount of Americans that have to be vaccinated for us to achieve that. In the meantime, we are hearing about some delays to shipments of the vaccine, that we're behind schedule in terms of getting it here in the United States. Jennifer Nuzzo has been covering all of this, as well as the U.S.'s response just in general to the COVID pandemic. Senior scholar at the Johns Hopkins Center for Health Security, also vast experience in health departments in the New York and elsewhere, understanding exactly how to respond to pandemics and epidemics that do approach the populations. Dr. Nuzzo, what do you think so far of how the U.S. has managed the rollout of the vaccine? Are you concerned about some of the delays that we keep reading about?
Well, I'm concerned in so much as the faster we get the vaccines, the better. And I'm sure everybody is very much eager to get to that point where we can even be talking about herd immunity. But in terms of the schedule that was outlined, this idea that, you know, we may not really have the widespread rollout until late into the summer and fall, that was always sort of my mental picture with how it was going to go. I know it's much later than what they've been promising, but I anticipated that there was going to be delays and that it wasn't going to go as quickly as initially communicated. So I think by that measure, we're on track with what I was expecting. But of course, the sooner the better.
Are you concerned about the fact that a lot of people are starting to act in a less cautious manner as a result of the hope of the vaccine, which is one of the driving forces behind the upsurge in cases we've seen recently?
I am concerned. I mean, we are in a situation where we're adding close to 200,000 cases a day. We increased our total case number by 1 million in 4 days. I think this is a byproduct of possibly people thinking that, you know, the vaccine is coming and the pandemic might soon be over. But also, I think it's just tired. People are tired. There's fatigue. They're tired of doing the things that we need to do and not gathering with their families and, using the safety protocols. So I'm very worried, and I'm particularly worried for the upcoming holidays because we know that these are times that people may choose to get together with people outside of their household, which is obviously a worrisome situation because it could lead to a further acceleration of